All right, guys. Good morning. Good morning. Hope you guys are doing well today. It is the 3rd of July, the day before. It's a half day today. So remember, the market does close early. SPY's sitting around lifetime highs again at 550s. Bitcoin all the way back down to 60K. Nvidia all the way down to 120s. All right, guys. Hold on. Let me get some music going. All right. As you guys get here, hit that like button. I appreciate it. Today we got non-farm employment change data. So it's basically the prelim payroll numbers. JPT4, Sam, Uday, Food, Blaze, Joseph, Vaughn, James, Ray, Dark, JT. Morning, good morning. Is it really? Ma, is Japanese yen down? Let me get some music here. I feel much better today, bro. I don't know what is. Uh, I feel good today. I don't know. Drink some coffee. I'll probably feel better. Is my mic sounding off? Let me see. Hold on. No, it's the same mic. Does it sound better or worse? All right. So better before it's cutting out. Okay, cool. So how are you? So T4, how are you at the new UFC, the UFC 5? I'm okay at it because a lot of it is like a similar. A lot of it is just kind of adding to UFC 4's gameplay, right? So it's very similar game. It's basically the same game. A couple different animations and stuff. I wasn't super impressed by UFC 5. I thought that, honestly, the best MMA game they've ever made was UFC Undisputed 3. That game did it freaking correct, right? Like UFC Undisputed 3. That game, I think it was by man, I can't remember who created that game, but it came out like a decade ago. That game was the best MMA game I've ever played. Beautiful graphics, perfect gameplay. They just did everything right. Everything that you would want in a UFC game, they did it right. Once EA bought it, it just is it right mic? No, this is the right mic for sure. Uh, I might have pressed a button. It says Yeti on the thing, so okay. So can y'all hear me? Mic check 1 2 1 2. Here, let me check the other side. Hold on. Okay, so can y'all hear me? Mic check 1 2 1 2. Here, let me check the other side. Hold on. Okay. Mic check 1 2 1 2. Here, let me. It sounds like I'm creating a beat with mic check 1 2 1 2. uh, you on gold? Mic sounds a bit hot. Hold on. All right. All right. Ooh, all right, I'm here. I'm up. I'm waiting for my coffee to cool down so I can really wake up. But yeah, looking at the biggest stock market news stories of the day here. Uh, today we got a gang of stuff going on. Gold's pushing up. What's up, Tiny? Good morning. Good morning. Hope you're doing good. Uh, yeah, so today, that's what I just mentioned in case I was accidentally selecting the wrong mic. No, I appreciate it. Yeah, it's all good. Yeah, it says this is a Yeti mic. Now it's not my home mic. I bought this mic brand new. I should have just returned it. Uh, yeah, where's Tesla at this morning? Whoa, dude, Tesla. You know, like, you tell people things, and like, wow, um, Tesla at 240s, guys, crazy. Um, I'm proud of where my stock selection has gone. Like I used to do. Y'all don't even know. I used to just play super momentum based like breakouts and like always bought the most hyped up stock ever. And I never looked at extension and a daily chart or anything like that. I've gotten a lot better at stock selection. Like the amount of swing trades that I buy into and make money on is very high, very high. Now I don't make money on all of them, you know, uh, but but yeah, I mean I'm up thousands on the year in swing trading and investing, and it feels good, man. It feels good. Again, it's been a long road to actually being profitable in those areas. It takes time to learn and build and figure out what stocks are worth holding, and also like I think a more important nuance of drink every time I say nuance. I think a more important nuance of this is like when to when to take large size and when not to. You know, and you also have to learn to kind of scale down and do different things. But yeah, Tesla. Again, and the argument I gave for Tesla over the last week here, and again, I even made a short about it. But what I said was, you know, if you diversify, like I'm holding like 40 positions right now. If you diversify, you're pretty good. Like the reason Tesla made sense is that Tesla is on a big downtrend on the year. Over a 52-week period, it's down a very large percentage, like a very large percentage. Prior to this latest run, where it was in April, it was down over 50% in the last 52 weeks. 50% drop is nothing. It's not nothing. Like that's deep extension that you do want to pay attention to. So if you like Tesla as a company, if you think Tesla is going to do well as a company, that's the time you buy it up. And that's where I bought it up. My average price on Tesla currently, I ended up selling a little bit. Uh, I ended up selling a little bit, but my average price currently on Tesla is 177. 177 average on Tesla. So my average price on Tesla is up here. It was 140s prior to me selling. And so yeah, we got in at 140s, sold at like 200s, sold some more at 230s. So we'll take it. Yeah, we'll take it. I'll have to publish that short. See what this news is. Tesla is up. Guggenheim adjusted price target maintains a sell rating, but they raised the price target from 126 to 134. Goldman Sachs maintains neutral and Tesla maintains 175 price target. All right, so CEO Elon Musk divulges his publicly traded stock portfolio, and it's in stark contrast to that of Bill Gates. That's the news. Tesla quarter two deliveries is what stirred this thing up. Good, good. Right. Yeah, I would go to Trade-Evade. Trade-Evade's been pretty reliable. Mike sounds a bit hot. Yeah. Uh, you on gold? Yeah, Tesla with a very good bounce back. Remember, today's a half day. Yeah, Bitcoin was making some downward moves that I saw last time. Yeah, sorry to hear about y'all's rhythmic problems. Like I said, Trade-Evade's good. I like Trade-Evade. You can use Trade-Evade on a phone too. It's been pretty reliable. Like, I've been trading on it for a minute. You know. Wow, only 100 people watching. Someone told me this channel is popular. I mean, we started the stream what, like 10 minutes ago, 5 minutes ago. And so, yeah, I mean, when jobless claims come out, we'll have over 1,000 people here. When non-farm payrolls come out, we'll probably have over 1,000. Yesterday, during the Jerome Powell speech, we had about 3 to 4,000 people watching. And so, I mean, popular is relative, I guess. But like, you know, if I was in front of 4,000 people, I'd probably, you know, I wouldn't be able to speak most likely if I had to do a speech in front of 4,000 people. So, I mean, you can try to act like we're not really popular or whatever because we just started it up a couple minutes ago, and it's 7 in the morning on a half day. But market closes at noon today. At noon today, yeah, definitely top three worst channels in the world right now. Though you don't watch this top three worst channels ever. Uh, I have to try to trade a vid account. You'll have to buy a new account, unfortunately, Blaze, if you go that route. School's out at noon. Yep. I appreciate it, T4. Dude, you never got back to me, buddy. How is UFC? How do you like UFC 5? Are you mad that it's basically just a carbon copy of UFC 4 with a few added animations and graphics? It's like as somebody that plays UFC games, uh I was disappointed in UFC 5. I got really excited for it and then I was disappointed. But even though I could see it was the same game, but yeah. Yeah, so non-farm payroll numbers drop on Friday, or the channel is popular. You ain't gotta explain. Yeah, I mean, most likely whoever it is just trying to poke buttons. Again, like we got Like this channel has like 11 million views or so, which I'm really proud of. Like for a stock channel, that's pretty solid, you know. Um, but we're not a big network either. So like I don't have 20 people working for me. It's just me, you know. Pawn is also a helper. Like Pawn helps me run this too, but it's just him and I, you know. Uh, he helps me moderate you guys, and I run the channel, and that's how I'd like it. And with that, we compete with the channels that have these big networks, like in terms of views and viewership. So yeah, I feel much better today, dude. I don't know what it was yesterday, man. It could be allergies, I guess. But yeah, appreciate it. What do you do? Feeling better today? Oh yeah. Yeah, the S&P's at highs mostly driven by Tesla. So again, if you don't remember what happened yesterday, guys. So the Tesla not the non-farm, the Tesla uh vehicle deliveries dropped yesterday, and yeah, the Tesla vehicle deliveries dropped yesterday, and they showed up here. We also had the JOLTS report. They said, quote, in the second quarter, we produced approximately 411,000 vehicles and delivered roughly 444K. We deployed 9.1 gigawatts an hour of energy storage products in quarter two. And this data is driving Tesla much, much higher. It's up to 240s right now, 236, 240s. It went over 240s at one point in pre-market this morning. Nvidia is also down though. Nvidia down to 122s, but again, the SPY, the Q, both at lifetime highs, both propelling higher here. Yeah. Also, guys, remember it is a holiday day today, so a lot of people are not home. A lot of people are not going to be trading, even though it's a pretty busy day. Like today, you know, we're an economic release channel. And so today, when non-farm employment data comes out at 8:15, it drops at 8:15. I'll put the timer up in a second. But when non-farm employment data comes out at 8:15, we're gonna have 1,000 plus people here probably. Jobless claims will definitely have over 1,000, unless we should at least. And then with the Fed minutes report is at 2 p.m. today. Remember, so the Fed minutes report is at 2 p.m. We're going to be streaming that live as well. And with that, we usually like typically with the Fed minute report, we'll get like 2 to 4,000 people watching that. Right. I don't know how it's going to turn out today since the market's actually going to be closed when the Fed minutes report drops, but we're going to stream it regardless. Uh, but yeah, that's kind of what to pay attention to. So yeah, basically today we got the Fed minutes report. We'll have thousands of people here watching that. And it'll be interesting to see what happens with it all because again, the market's going to be closed when it drops. How do you feel about Kathy saying Tesla to 2,600 in the future than she sells yesterday? Yeah, I think it's weird, but hey. I never really like look, no offense to Kathy. All right, genuinely no offense to Kathy. She's obviously making millions and doing something better than me. And so I can't really knock her at all. Um, but with that said, in terms of just her basic stock selection and her timing of buys and sells, I disagree with a lot of it. Like, I don't really like where she buys and sells her stocks. Like, but again, it has to do with my own specific style. Like, I like to buy beaten up stocks that are down big that I think are generally healthy. If I think a stock is generally healthy, I'll buy it up if it's beaten down over the last couple months, last 6 months, 3 months, 2 months, whatever. If it's beaten down enough and I think it's a healthy company, I'll buy it and I'll sit on it and wait for it to bounce back. Right. That has given me a really big edge. I'm up thousands on the year doing that. Uh, and Kathy tends to do the opposite, right? Kathy Wood tends to like she'll have really hyped up stocks that are up huge, then she buys them and she'll kind of sit on them for like I don't know how long. I don't really like that strategy. I think there's too big of a chance that you're gonna like buy something that goes like this, right? A stock's breaking out, looking high. He's buying it here a lot of the time, and then hoping it goes higher. I don't like that at all. I would much rather buy something that looks like this here and then hope for it to bounce back and do that. Like that's my strategy. That's what I personally like doing. Um if Roy Kitty gets sued pumping GameStop, Kathy should get sued for pumping Tesla. You deserve all the success. Hey, thanks so much, Jonathan. I appreciate it, brother. Thank you, man. Yeah, I mean, we give people free stuff. That's what people should appreciate it. Like we cover economic data. Like honestly, we've got to change the trend. Everybody else is now everybody's trying to cover economic data, and they kind of started watching us. Not all of them, but a lot of them. So we're trendsetters over here on YouTube. But we'll see what happens. Today. Again, SPY right around lifetime highs at 550s. Nvidia's down a little bit on the morning. Tesla, of course, is up huge amounts. The QQQ again right around lifetime highs. Um, Tesla's the big story of the day, though, after the delivery and production numbers yesterday came out at 9 a.m. And since then, it's been a big bull run. Here's an hourly chart. You can kind of see the data came out here yesterday morning here for Tesla deliveries, and they just flew up. Do you think Tesla will retest 200? I'm not sure. That's super nuanced. Really, no idea there. It could. It might. I don't know. You think AMD? Right. Yeah, she didn't sell all her shares. That's what she usually does. Sometimes she's probably getting. I don't know. What about AMD? AMD, it's down over the last couple weeks. I don't mind that. It's down over the last 4 months, actually. I'm sorry. I really don't mind it. Uh, I don't hate the entry, but I also think that I don't hate the entry for AMD, but I also am skeptical because I still think even now the PE ratio is pretty high for AMD. I might be off on there. Am I? Let me see. So AMD's this is earnings season month too, Chad. I forgot. So the last 4 quarter EPS for AMD. Let's take a look. Let's see what AMD's PE ratio is currently. A lot of people drop the wrong numbers here for AMD. So AMD right around 164. So AMD last one was 62 cents plus 77 cents, which was a miss, plus 70 cents plus 58 cents. Right, so the last 4 quarter EPS is 267. And so 267 divided by 164 gives it a PE ratio of about 61. So, like, you know, it's not a horrible PE ratio. Like, it's not like it's hundreds. Like, people are acting like AMD's got a PE ratio of 300. I don't know where they're getting that. I think it has to do with like GAAP, which is generally accepted accounting principle data, and how they interpret it. But the regular PE ratio for AMD is about 61, right around 60 PE price to earnings. Uh, it's not great. That's not like an amazing number here. Like that's not an amazing number. Uh, but it's also not horrible. And so if AMD has a couple good quarters of EPS and margins, then they might be in a good spot. But and their earnings drop right at the end of this month, I believe. Can you put the timer up? Yeah, I got you. All right, so the timer here, we are putting this up. Well, how long we got? We got non-farm employment change data drops. It is 7:15 market time. We got about an hour until that drops, like almost exactly an hour. Right. All right, so here's the timer. We got it up. I wish they'd let me shrink this timer, dude. See, I'm gonna click this so much. I'm gonna have to eat this, minimize this, and we'll have to do what we did yesterday where we put up stuff. I'm gonna put the timer up right here in the middle. Put up like gold maybe here. We put up like gold. Here's gold. You see, gold has been killing it right now. Like gold's been doing pretty well. It's not the fourth, but have you seen the FUD about the plastic? Like, no, I haven't seen it. Hey, what's up, Beach? Let me catch back up with the chat. How me a bit if numbers come higher than expected. Is it bad or good? So this is payroll numbers that are dropping at 8:15 for the non-farm employment prelim non-farm payroll data is what this is. So every Wednesday before payroll data drops on Friday, you get what's called the prelim non-farm data. It's the prelim payroll data. It signals economic growth and payrolls, right? So what I mean by that is like this data is going to show payroll numbers, like how many people are. It's called the non-farm employment change. It's economic growth. So higher than expected signals economic growth, and whether that's good or bad depends on the market. Sometimes lower economic growth causes a positive reaction. Why? Because the market fears inflation, and the more economic growth there is, sometimes potentially the worse inflation there is. And so, good economic growth is not always a positive, optimistic thing, especially in the last decade or last half a decade, where we've had ridiculously high inflation. Prices have spiked huge amounts. Groceries are high. Everything is really, really expensive now. Prices have gone up so much in the last 5 years since the pandemic and the money printing, quantitative easing, uh, you know, dovish or dovish Fed that we had after 2020 in the pandemic. And to be fair, the Fed had to be dovish because if they weren't dovish then and bringing interest rates down to stimulate that spending, we could have faced much worse recession, depression, stuff like that. And so we mostly avoided it. Um, there were a couple sticky parts there where we you might have technically hit a recession or depression, but it didn't last, and we ended up like rebounding in the economy pretty quickly. But the consequence of a dovish Fed is inflation, right? And so following 2020 and the pandemic and the stimulus checks and the quantitative easing, money printing, uh, the consequence was inflation. Inflation spiked up to almost 10% for CPI. PCE spiked up to like almost 6%, which is very high for PCE data. Um, and so, now the Fed is much more hawkish now. They've been hawkish for the last few years, trying to combat that inflation and bring it, down. And the way they combat the inflation and what hawkish means is the Fed's trying to keep interest rates high. They're trying to discourage spending in what's called a restrictive monetary policy. Uh, Restrictive monetary policy just means that they're trying to keep interest rates high to discourage spending, push the economy down a little bit, restrict the economy, if you will. And so, yeah, we've been in that for a few years. Although the last Fed meeting, they were talking about slowing QT down. They're doing what's called quantitative tightening now, which is kind of the opposite of money printing. It means that the Fed stops buying bonds and they let their current holdings mature and run off, and they they reduce their balance sheet, and this takes liquidity away from those markets and ultimately causes banks to keep interest rates high. They've also been raising rates for a while for the last few years, and they've been pausing rates for the last like 8 months, 9 months, 10 months. Maybe it's getting closer to a year now since they've been pausing. And the big question, of course, in markets is whether the Fed's going to cut rates in September, or next or this month in July. At the end of this month, they're doing it. We have another Fed meeting. A lot of people are talking about an FOMC decision of a rate cut in July. Now let's see the CME watch tool. Let's check out the Fed watch tool. So here's the CME tool. You can see the next Fed meeting is in 28 days. 28 days later, some would say. But yeah, even still, a large majority of people are still expecting a pause in rates, which is basically no decision. They're not raising rates, they're not lowering rates. Most people are still expecting a pause in rates, 91% plus expecting a pause. We still have, 8.5%, 8.8% expecting a 25 basis point cut down to 5 to 5.25. Again, we'll see. We'll see. I don't think we should cut rates this month. I don't even think we should cut rates next month personally, but I know they're getting a lot of pressure. It's an election year. They want a thriving economy at this point in time. Um, so we'll see what they do. I think most people overlook the extent to which Tesla is actually data gathering and then selling company. Each of their cards is not a so hidden GPS tracker of each client like yourself. Yeah, for sure. They're definitely a tech company. That's why people call them a tech company over an automobile company. Is because the data that they're using that data and monetizing it, which is what most tech companies are doing. Every major tech company is doing a variation of data gathering from its clients, and that's normal. We can't really knock them. If we want cool stuff, we got to let them have our data, and that's just kind of the swap you pay. Yeah, what's up, Kay? They get even more metadata to mine and or sell. Absolutely, Sam. It's a huge implication for FSD, obviously, but I also think optimists that robot will have the brains and benefit of all miles driven and info gathered during FSD. 100%. And again, I think if Tesla stays on the front of that, they're going to do really, really, really well. Uh, if they can stay on the front of that, they got to stay on the front of FSD. They got to be the one to do it. Like these other legacy automobile companies are going to be pushing forward as well. What I mean by that, like legacy, I mean like Ford, Honda, so forth. They're going to be pushing towards EV and maybe hydrogen vehicles. Maybe the future might be hydrogen as well. I know Tesla's talking about hydrogen, um, and so that might be an interesting look into the future as well. But we'll see. Yeah, so Friday's actually the biggest day of the week in terms of data. So Friday, we have non-farm payrolls, the big payroll release. We'll have thousands and thousands of people here on Friday. We'll have non-farm payrolls and unemployment. Unemployment for Friday is expected at, let's see. Yeah, so non-farm payrolls is expected at 200K payrolls. Unemployment is expected at 4%. 4% unemployment rate is what's expected, and payrolls expected at 200K. Again, if you guys think we'll go over and under. I'm also gonna do a poll. I haven't done a poll yet. I'm just realizing I haven't done a poll. My bad. Uh, is the current market want or fear economic growth? Wants. Alright. Uh, alright, there you go. right, so vote in the poll, guys. Does the current market want or fear economic growth? Again, to put this into perspective, like conventionally, of course, again, the market wants economic growth. Like we want low unemployment, we want higher payroll numbers, we want thriving GDP. Those are conventionally good things. But right now, in a in a period of time in which the last 5 years we've seen massive inflation problems, it's not that easy. It's simply not that easy. The market very much could fear economic growth, and they have. We've seen a lot of jobless claims reports come in lower than expected, and the market goes down. We've seen a lot of jobless claims numbers come in higher than expected, which means more people filed for unemployment, and the market reacts positively to it. We've seen a lot of payroll numbers, specifically non-farm payroll numbers, come out much higher than expected, and the market dumps on that report. We've seen non-farm payroll numbers come out much lower than expected, and the market flies on that report. And so again, you have to understand the more economic growth we have, the more inflation. And inflation, once it gets bad, gets really, really bad, really, really fast, or can, I should say. And so this aspect of it is like, do we want to like it's kind of like picking up pennies in front of a train track. Like we don't want to do it too much because then we get massive inflation problems and that's dangerous. So again, the question is, does the market want economic growth right now? I don't know. I don't know if it does or not. Yesterday, Powell spoke with the ECB, and to be honest, he sounded dovish to me. Sounded like we were going to cut rates soon. That's what he sounded like. Sounded like he thought the economy was good, we did well, everything was good, and that they were gonna cut rates soon. And again, it's an election year. So the reason I keep saying that is because the nuance of election years and the Fed generally goes during election years, they want a thriving economy. And so the Fed in turn is dovish and much more dovish in those years to stimulate a thriving economy during election years, right? Because that's what looks the best, to be honest. And so, yeah, that's what we're currently at now. Kind of like Tesla reporting crappy numbers and ripping higher. I know. I think some people are just so biased against Tesla that okay, the reason Tesla is ripping up is like crappy numbers are subjective. Just because we came in lower than what's expected does not mean bad. Expected means expected. It doesn't mean like it doesn't mean okay. Tesla, a lot of people were forecasting Tesla's delivery numbers to be under 400. So if with Tesla showing up roughly as expected, that's an optimistic sign for a lot of people who were saying Tesla was in the dumps, you know. And again, I get it. People are still holding on to it. I think people latch on to companies and either love them or hate them. I think that's the wrong mindset. And I think you got to look at things subjectively. You can't just like, again, shorting Tesla as an example, right? One of the strongest companies in the world. When you look at a daily chart, this thing is down for the last 3 years, So like hoping to get more on the downside here is a silly thing in my opinion. Like you got to play the ranges. And again, like Tesla's down over the last 3 years. That's not time to short it. Like this trying to profit from this is going to be very hard. It's just not enough room. You know, I think there's more room on the upside here. And so that's what I play. But again, that's my own strategy. I can't guarantee it's going to work for you. I'm not telling you to buy anything. I'm not an investment professional and not liable if you lose. I'm not even claiming to be a good trader. Don't copy me. Top 3 worst traders of all time ever in the world. Uh, Super micro semiconductors. Yeah. Wouldn't surprise me at all if the necessary legislative changes for full self-driving takes 5 to 10 years. Yeah, for sure. I wouldn't be surprised at that either. Again, like the speed bumps that you need in terms of infrastructure with FSD is there. Like it's obviously not something that they can rush or they can get done quickly. It's something that's going to take a long time. It's kind of like, the easiest correlation I can see in history is the automobile versus the carriage, right? Like when the automobile and the carriage both were on roads at the same time, it was kind of chaotic. It was like, and this was back when they just kind of let things go as well. Now we're at a much more regulated environment governmentally. And so it's not going to be as easy to just kind of pass full FSD and let cars drive themselves without drivers. And that's one of the things you got to take into consideration with the robotaxi event that's coming up. Tesla's robotaxi event is coming up next month in August. Man, we're already in August and almost to the fall month. Time is freaking flying, dude. Time is absolutely flying. Yeah, and a cut is a bearish event, not a bullish one. Well, I mean, somebody said this yesterday, and it's absolutely true, which is that historically, when we cut, right? Historically, when we cut rates, it's usually because something's breaking, right? So, like, you know, you got to think about the Fed brings interest rates up. They raise interest rates. They try to discourage spending to help inflation. But what they're discouraging is the economy. They're pushing the economy down. And if you discourage the economy for too long, what happens? You hit a recession, you hit a depression, things break. And so, a lot of times in history when we cut rates, it's because something was breaking. We get spikes in unemployment, we get spikes in uh, we get dumps in GDP. GDP is getting very close to negative or something like that, right? Then we start cutting rates. And so historically, that's kind of how it went. And that is why a lot of the time when we cut, we get bearish momentum because we're bringing interest rates down and it means that something's breaking. I think if we cut now, especially with the relatively decent data that we've had over the last few months, who knows if it's going to be bearish or not? It's not like again, Mark Twain famously said, "History doesn't repeat itself, but it definitely rhymes." And so what I mean by that is like maybe it does repeat itself and maybe it doesn't. We'll have to wait and see. Nobody knows if a cut's going to be bullish or bearish. We can now probability say it's going to be bearish, but again, when you take the nuance of history where they're usually cutting because something's breaking, and I think if we cut now, it's not going to be because something's breaking. It's going to be because it's an election year and the Fed's getting pressure to stimulate the economy. So yeah, there's just a lot of interesting ways to look at that, but we'll see. I'm not saying I know for sure anything. Yeah. Yeah, but that correction is necessary though, BB. So he said decent parts of Florida and Texas housing market lost 30 to 40% of price in the last 2 months. I would say that is concerning. And again, I agree it's not great, of course, but you have to look at it objectively. Okay. So like you got to look at it over it with the lens of the last 5 years. And so what happened over the last 5 years is again the Fed brought interest rates down in 2020. In 2020, the Fed did QE. They brought interest rates down to almost zero. Of course, real estate agents, mortgage brokers, lenders freaking love this because it's super easy to sell loans when interest rates are so low. And interest rates were low prior to 2020 as well. But for the past like okay, between 2019 and 2022, housing market had one of the most ridiculous runs in history. House prices freaking doubled, you know? And so that needs to correct. That's not sustainable. It needs to correct. Like houses coming back down to earth a little bit is not the end of the world. I'm okay with it because it needs to happen. House prices were never going to stay there. And so they just went up too much too quickly. You need a correction. Um, Kind of like Nvidia, kind of like Tesla. Like things are not going to be able to go straight up, straight up, straight up. They're going to need to come back down to earth a little bit. And so I think housing prices coming down a little bit is actually a positive thing because it's necessary. Because again, one of the biggest problems, one of the biggest complaints from this inflation that we've gotten over the last 6 years, 4 years, is house prices. Like house prices are where I think a lot of people are referencing house prices to show how unsustainable things are for the average person. Yeah, I'm a real estate agent as well. My license is probably inactive, and so I don't have an active license, I think, right now, but I do have my license, it's just not active. I'm not which means that I'm not with a brokerage, right? Alright. Yeah, well, the car market needs to come down as well. Like, though both of those markets, the housing market and the automobile market, they need a correction. Like, they need a correction. Again, when we had those shipping and supply restraints, back over the last 5 years, this caused a huge bubble in car prices and housing prices. That needs to come back down to earth a little bit. Again, I experienced all of this. I watched all of it. These need to drop. It's more sustainable and reasonable. I paid on my house, right? In terms of my home taxes, I paid less last year in taxes, which means like when they calculate taxes, right? It's called the assessed value, like how much they think your house is worth. They're going to tax you and how much they think it's worth. The assessed value of the home dipped. Um, this past year, we paid less in taxes than we did the year before, and so this needs to happen. I'm okay with it. I don't even house price dropping is fine. It needs to happen. Housing was obviously in a bubble. It wasn't sustainable. Car payments are higher than mortgages. Yeah, but people need to live within their means as well, though, guys. Like I said this yesterday, I'll say it again. A big problem with just people, like everyday people, uh, is that they live way above their means. Everybody wants to look wealthy, and I think you shouldn't care about looking wealthy. You should care about being wealthy, and you're not going to be wealthy trying to look wealthy. I guess is the point. Um, don't try to look rich, be rich is a very famous quote, and it's absolutely true. If you spend all your money trying to look rich, you're not going to be rich. You're going to be spending all your money on nonsense. And what I mean by that is like financing brand new cars, terrible idea. Terrible idea. You're going to lose 30% of the value driving it off the lot. People are putting themselves in homes they can't afford and they're paying ridiculous amounts. You got to live within your means. Like you can get a very nice used car if you got to finance it, fine. But you can get a very nice used car 5, $6,000, $7,000, but nobody wants to drive around in a $6,000 used car. Everybody wants to be flashy, And I get it with young people, like young men want to get girls, and I get it. Uh, but you got to live within your means, And the people that are smart with it, they can get by. But a lot of people are just being reckless. Yeah, no, it makes sense, Pawn. 20 years for a car loan is ridiculous, man. Again, nobody's gonna like what people are gonna realize is that and here's the problem is that people are spending all their time and energy like by the time you're done paying that loan off, your car is gonna be done. It's gonna be a shell of its former self. A lot of people, BB, a lot of people. Uh, especially in NOLA where flood insurance, yeah, for sure. Car dealership, real estate investment, trust short. Yeah, but that's life. It's a rough spot right now for a lot of people, but I'm not trying to judge. I just think people got to live within their means. Like, if you really want to live good, again, like, okay, if you really want to do well, you got to kind of build businesses. Building businesses is not cheap. And so, if you want to genuinely be rich, you got to build businesses. And that's not cheap. That's expensive. Costs money to do. And you got to put that money up if you want to actually do it, you know. And so, if I didn't have income like I wanted, I would be focusing absolutely on building businesses. Uh, Not trying to look rich. It's the gig economy. Yeah, I mean, I get it. What he means by the gig economy is like Uber, Lyft, Uber Eats, like Instacart, stuff like that. You know, people are working for that type of stuff, and in that situation, maybe financing a car is fine, but it's still a risky thing. 20s are for raising capital, 30s are for allocating capital, and the rest is for passive. Yeah, for sure. If there is such a thing as passive income, if you want passive income, nothing's passive unless you're living off of dividends, or even rental income. Unless you got a property manager, it's not passive. Sell options for income, nah, man, that can turn against you really quickly. You'll end up owing so much money if you get a bad. Selling options is great if you know what you're doing, but a lot of people don't. And if you sell the wrong option, you have an infinite amount of losses you can take. Yeah, for sure, milk. 100%. I agree. Yeah, most people just don't know. It's not that they don't know, it's not that they don't know. It's that they don't research it. Um, like they and I guess that means they don't know. Most people just get stuck wanting to look successful. And I get it, everybody wants to look successful. Uh, but you can't let that desire to look successful overpower your actual success. Easiest way to make money, to be honest, is just find something you're interested in and monetize that. You got to be genuinely interested in it. Like for me, I like poker, I like jujitsu, I like stock trading and investing and swing trading and economics. And so, what have I done? I've monetized economics. You know, uh, that's the easiest way to do it. That's the only thing where you're gonna have the energy to and the perseverance really to like continue to push and build it and build it. Like I started this channel a long time ago, and now it earns you know a great amount of money for me. Because I invested into it because I was interested in it. Regardless of the money, I wanted to do it. And so, figure out what that thing is for you. Stock again, streaming is saturated. So I hate to break it to you, you're probably not going to be able to do what I'm doing, but figure out what your thing is and monetize that, whatever it is. The beautiful thing about social media, they put a lot of heat on influencers. Mostly from people going out pranking people, interviewing people on the street. Like those guys give everybody else a bad rap. But you know, I could use the skateboarding example. I used to skateboard, like a lot as a kid. I was pretty good. I could do like double kick flips. Sometimes I could do triple kick flips. Used to skate stairs, like used to do a lot of cool stuff. Uh, back in the day when I was a kid, when I was a teenager, if you wanted to be sponsored, if you wanted to make money skateboarding, you would have to go find a sponsor, send them a sponsor me tape. That sponsor would have to sponsor you, give you boards, give you gear, create like marketing material from you, like edit it, put it out on VHS or DVD or wherever. And, maybe you would get a cut of that. Maybe, you know. Uh, the beautiful part about the technology growth over the last 20 years, 30 years is that now you could do all of that yourself. Like you don't need a sponsor anymore if you're a skateboarder. You could literally film yourself, set everything up yourself, edit it on your phone, upload it to social media, grow a large social media following in skateboarding like very, very easily that way, you know. And so you don't have to rely on like an editor and any of that stuff anymore. You can mostly do it yourself now. And you could it's not just skateboarding. This is just an example. You can do this for anything now. And so again, people give social media a lot of heat, but it could be a powerful thing. Um, yeah, for sure. I had a 92% chance of being out the money option, wound up getting my shares called. That's an 8% chance, and it happens. Seen just about anything happen. Yeah, I mean, there's obviously a lot of risk selling options. There obviously is. People might not have been caught in that risk yet. It's one of those things, kind of like the martingale roulette strategy, right? Where you do something and the probabilities of it happening are very, very low. But if you lose in the martingale roulette strategy, you've lost 6 times in a row. So the normal person's gonna say, "Oh, bro, that's never gonna happen." It does happen. Same thing with selling options. Like it might be a low probability thing, eventually you're going to get stuck in it and you can lose everything you've made plus more. So I don't know. I've just never gotten involved in selling options. And to be fair, I'm not the biggest option guy anyway. I just don't need to sell options. What made you pivot from real estate to day trading? You know, I guess the easiest way to put it is like I am not a big pressure salesman. I'm not. Um, I don't like pressuring people to buy or sell anything. I would rather give people the option for it, and I don't know if that necessarily meshes well with real estate. Uh, you know, I again, I've given this example before, but I've had a job where I had to give out coupons at pet stores when I was a teenager. I freaking hated that job. People were rude. Again, most people are nice and they're like, okay, thank you. And then they just toss it in the trash, which is fine. But some people just don't even acknowledge your presence. They're just super mean. Like these are the worst people in the world. Like they're just jerks. They're just unhappy with their life. But that type of thing just kind of haunts you. Like you don't want to like it's not a fun thing. And because of that, I just never liked sorry, I bumped my mic. I just never liked doing it in real estate. And I think in real estate, you got to pressure people. You got to close. You should ACB always be closing or ABC always be closing. And I just wasn't that type of person. Um, and so, I mean, I don't know. I could probably do it if I ever decide. Like maybe I'll do it sometime in the future when I'm older. It's also an older person's game mostly. You know, uh, when I was doing real estate, I was in my mid 20s and I looked young. Like I looked young. Like, people would think like, if I didn't have a beard and at the time I couldn't really grow a full beard in my mid-20s, so at the time, I probably looked like I was, like, 20, you know? And so, the first thing people would ask me is, "Hey, how much experience do you have?" And I would have to be honest and say, "Oh, well, not that much." You know? And, I would never hear from them again, because again, nobody wants to be somebody's first real estate deal, not unless they're really I eventually found somebody and got clients and did some deals and everything was great, but, I don't know. KOSS is a headphone company. They went really big with GameStop and AMC and those big squeezes that we got from there. So, like, Koss, they did really big in those moments. Like if you look back at their like history, they got really big in 2021 when AMC and GameStop, really when GameStop did the massive squeeze, KOSS went all the way to 120s, crazy high, like went crazy high. They squeezed up a little bit recently as well. It was like KOSS, it was Nokia and OK. What else? BB BlackBerry is another one. Yeah, but yeah, we'll see what happens. I'm skeptical of these. How's Walmart doing? I'm in Walmart, I think still. Oof, you love to see it. Walmart, Apple. How's Apple doing on these runs? Be 6 times point 0.5, which would be 3 to the power of 2. So 3 times 3 times 3. Yeah, I'd have to get a calculator out. Yeah, yeah, for sure. 200K account can make you 50K a year. Yeah. I mean, I don't think that's an unreasonable expectation if you're really good at trading to make 25%. Now that's like the elite of the elite, but yeah. Yeah, Bed Bath and Beyond was my last major winner back when it short squeezed after earnings back in 2022. Apple looks really good though. Gold has pushed up as well, guys. So let me pull gold up. Like here's gold. Here's the gold chart. Gold's been mostly flat though. But again, gold. Like again, I say this multiple times. The market itself, chat, is all about hedging against inflation. If you do not hedge against inflation long term, you lose money. Gold is one of the best long term inflation hedges. If you look back at 2000, gold was at like 300 bucks in 2000. 300 bucks, right? A little bit lower than that. Really, it was at like 250s. So gold was at about, let's see, 2000. Yeah, it was about like 250s, 200 at one point. If we go back to the end of 1999, gold was at 250. We'll just use 250. 250. We're at 2400 right now. Gold has almost 10x in the last 20 years. 10x, guys. It's gone up 10 times its value in 20 years. 25, 20, yeah, 25 years. In 25 years, gold is 10x its value. So if you're not hedging against inflation long term and something like this, now you can do this with anything. You can do this with real estate, investment trust, real estate as a whole. They're all inflation hedges. You can do this with the S&P, the Nasdaq, the Dow. You can do whatever. If we look back at the SPY itself, the S&P here, same time frame. This was prior to that big crash, though. So yeah. So if we look back at the same history, SPY was at 122 back then. 122. The SPY is only 4.5x. So the SPY has performed over 50% worse than the S&P or than gold. So again, don't downplay gold, guys. Gold can be a powerful thing. Powerful thing. I have two service-based businesses, although profitable, I end up trading way too much time for money. Yeah, well, service businesses are not enticing to me at all, just because they're not as scalable as I want them to be. They're scalable, but not as much as I want them to be. I think if you're gonna start a business, like what I'm looking towards is like product based. Like start it, like it needs to be some sort of product that can grow. Um, Service based is always gonna be a problem. So JT, who are you talking to? You talking to me or you talking to Faye? And you need to invest in some properties or something else other than doing what you're doing, because that's in the ends in one day before you know it. Uh, Making 500,000 plus every year at the age of 35 running businesses. I'm not a hater. I've just fallen into the same crap one time. Why did you decide to sit against light? I don't need people to see my face right now. And this whole room is a sunroom. And so I could sit on the other side, but you got to understand, like, I'm in my mother-in-law's sunroom right now. My mother-in-law and my aunt and my wife are going to walk outside to drink their morning coffee in and out, in and out. And so if I sit on the other side of this table that I'm on facing the other way, they're going to, number one, be on camera outside all the time, as well as they're gonna be walking back and forth, and it's just disruptive. So, yeah, this is the best spot for me, and I know y'all aren't gonna be able to see me the best. I know there's light in the background, but, you know, y'all will be alright. Silver too? Yeah, silver's great too, and it's cheaper as well. Yeah, you'd be blinded by the devastatingly handsome nature of me as a whole. Top 3 most handsome Ryan Felipe slash Forrest Griffin slash Paul Felder looking people in the world right now, chat. Uh, Cheers to you. Hey, no, it's all good, Tim. I know I'm just messing with you, bro. Yeah, it's all good, dude. I get it. I get it. There's sun in the background. I understand. Oh, y'all can't hear the music, bro. I've been sitting here talking this whole time, dude. I'm sorry. Oh, yeah. I hear you bragging. I'm not really bragging, man. Like, again, I think it might rub you the wrong way. I think some people get weird, and that's okay. Uh, I'm not really bragging. I'm just talking to people about business because that's what I'm passionate about, and I'm trying to use my example as an example. I'm trying to use whatever else I can as an example. I'm trying to tell people, like, monetize your passions. That's the move. And you might be scorned with what you did or whatever it is, JT. And again, it's all good, brother. It's all good. I definitely have bought properties with it all. And again, I get it. Like, I think sometimes people have confirmation bias. What does that mean? I mean, like, they want things to be a certain way, so they project that onto other people. But again, regardless of what happens, I'm gonna be fine. I've saved enough. Stop hating on the man, let him lead. He's awesome. Right. I mean, listen, it's the internet, so I don't think I've ever told anybody how much I make. All I said one comment that said, hey, I make pretty good money doing what I'm doing now because I monetize my passions, and so to say that that's bragging, it's like, I guess you could say it's bragging. It's really just trying to talk to people about business because that's what I'm interested in. And I think that should be a very understandable thing. But again, if somebody else is struggling, that might hurt to hear, because people who are struggling don't want to hear about people that are doing well. And so it's just it is what it is. Thus is life, I guess. But calling it bragging is a little bit of an embellishment, I guess is the best word to use. You have trolls, that's how you know you made it. Yeah, for sure. Keep going, bro. New levels, new doubles. Yeah, for sure. Appreciate it. Sometimes you go quiet. Do I go quiet? I know I forgot to unmute the music. That's my fault, chat. Yeah, I don't think Tim's a hater. I think Tim's talking about the light. Yeah, who said they were making 500K every year? Also, if it makes you feel better, JT, I save almost all the money I make. Like almost all the money I make, I save. Like I never spend the money I make on any type of extravagant thing. Like I invest into different things, right? Like again, I get very careful saying what I'm about to say, but like I buy watches and I put them in safety deposit box, like watches that I think will be good investments, because like some good watches tend to appreciate over time. Like I save almost all the money I make, especially percentage wise versus how much I make. A lot of it is just getting tucked away, because that's the smart move. I mean, let it out, JT. It's okay, brother. Yeah, again, he actually just confirmed what I thought, which is that like he's just struggling himself, and so sometimes he hates to hear it. I don't know if I brag. I might use credibility. Like I might build my credibility by telling people the truth. Can you ask your son Tesla up or down? I'm gonna follow his move. He's sleeping somewhere. Yeah, that's super weird, Blaze. Again, it's very strange. Again, it probably has to do with my guy struggling himself. Like, again, typically people who are not making very much money typically get mad at the people who do sometimes. It's kind of an immature reaction, but thus it's a common one. Again, I don't even know if I would say, do y'all think I brag a lot? Like, again, I'm genuinely asking. And if I see a bunch of no names that I've never seen before saying it, then, but do I brag too much? I feel like I'm not even bragging. I feel like I'm trying to talk to you guys about business, and I use my own individual examples of that business to kind of add to the conversation, but I'm not intentionally trying to like make anybody feel bad. I'm just trying to give people examples so people can follow the path that I've done and like hopefully do it themselves. I'm trying to share the wealth, not brag about it. Uh, but hey, definitely top three biggest braggers in the world right now. Uh, for somebody that calls themselves the top three worst trader of all time ever in the world right now, I guess I brag too much. Yeah, a lot of it is sarcastic, like ironic brags. Like I'm the top three most handsome trader of all time. Like, listen, I'd say you were in the middle. Okay, fair. Right, Sam, you almost never brag, and when you do, it's usually sarcastic. Now they're just hating, bro. Okay, thank you guys. I appreciate it. I'm sitting there like thinking, man, dude, am I bragging too much over here? Like to be honest, guys, the most I come to bragging, and I'm disappointed that this has gotten me off track. The most that I come to bragging is like I tell people the truth, which is that if I wanted to sell a day trading course and use my house, which is a nice house, I'm not bragging about it being nice. I'm trying to tell you guys, so hopefully you guys appreciate what I'm doing now. I have a nice house. If I wanted to use that house as like a credibility boosting thing and sell you guys a sleazy day trading course, pretending like I bought that house day trading, which I didn't, and use that as some type of big credibility boosting thing, I could, and I could probably make millions of dollars selling you guys a day trading course, like a lot of other people on YouTube. Again, I don't do that because it wouldn't be a true reflection of me as a person or me as a business person. Like it just wouldn't be real. Like it would be lying to you guys to profit. And I don't want to do that. That's not me bragging. That's me being honest and telling you, hey, I didn't earn my house day trading. I never claimed to, and I'd rather be real with you guys versus a lot of the other people on YouTube who are out there, like I've heard a lot of them are using their dad's cars, you know, or whomever, and using that, acting like they're day trading and then selling you guys a course on how to day trade. I just, I'd rather not fall into that path, if that makes sense. Yeah, 'cause that's what most people day trading do is they sell you a sleazy course on publicly available content that you could probably find all the stuff in that course for free by just using Google, and they end up making millions of dollars from it. They rent a mansion or whatever, and bro, you didn't buy the house from trading? Of course not. Bro, you're good. You did it, and you share your professional experiences. You ain't doing it right if you don't have haters. Yeah, for sure. That's what I'm doing it to help. But again, I think some people, when they're struggling, they lash out, which is where you see, um, dude, it's not bragging. You're just conversating. If you were quiet, they would say you are boring. 100%. Absolutely, they would. With the music in the background, only thing missing is stripping. Y'all are gonna have to pay more for that. If I'm just being honest. There was a moment in time where this channel used to do push-ups for money. Every dollar donation, we'd have to do two push-ups, and we ended up doing like 600 push-ups one day just off of pure donations. What a moment in time. 7 out of 10, top 2. You don't brag enough. You don't brag. You're just confident. Right. I feel like I'm just confident. Yeah, they don't have the same sense of humor. Yeah. That's what it is. I have a very unique sense of humor, I guess, but I feel like that's why people watch the channel. I gotta be careful I don't venture into bragging over here about how great my humor is. But yeah, I try to have like a playful, sarcastic humor. That's how I am as a person. That's how I act with that's how I behave with my daughter. Like my daughter and I act like this constantly. Like we make fun of each other in a playful way. We use a lot of sarcasm, but we have a good relationship, and right. They rent Lambos, advertise they bought it, Airbnb a mansion for a day, and use that. Yep. How do you feel about shorting NKLA today, bro? NKLA isn't that the one that rolled the truck down the hill? Right, that's the roll a truck down a hill company, right? Yeah, I don't like them at all. I think they're a scam company. They've split multiple times. They are popping up a little bit. I just don't know enough about them. Maybe they're up on. Are they up on Tesla like sympathy? Oh, is the music louder? All right, is that better? Let me know if that's better. I turn the music down. Let me know if it's too much. I appreciate what you do. Hey, thank you guys. You should start doing that again. You'll be in shape. Yeah, but I already train jiu-jitsu pretty regularly. And jiu-jitsu is very intensive. Honestly, though, my arm feels better, guys. Like my arm feels better. I feel like I've had like a slight fracture in this arm for months and months. It hasn't gotten any better. Probably from getting arm barred and being stubborn with it. But my hip, my groin and hip pain that I had from jiu-jitsu is getting better too. I don't feel it at all now. This is the longest break I've taken from jits in 8 or 9 months since I started. Top 3 worst 2-stripe white belt in the world right now. Definitely appreciate you, John. Big fun here on this channel. You deserve everything you have. Hate the people selling courses to beginners. Hey, thanks so much, Blaze. Yes, but you are a white belt. Oh, I'm definitely a white belt. But in jiu-jitsu, a white belt is a different thing. A jiu-jitsu white belt will beat most people up in the chat. Okay, just to be fair. If you don't understand what I mean by that, a jiu-jitsu white belt is different. In karate, within a year or two, you're going to be a freaking super high-level brown or black belt. Jiu-jitsu is not like that. In jiu-jitsu, it takes years to get your blue belt. It's not something like karate where you're going to have a new belt after 6 months. So most like a 2-stripe white belt, which is what I am. You're gonna if you roll with them and you've never trained, you're never gonna win. So like a 2-stripe white belt has a decent amount of experience, I guess is the point, versus other martial arts where you can have a black belt in 3-4 years or whatever. Basically, I'm one of the top 3 greatest jiu-jitsu white belts of all time and guillotine artists in the world right now. And we try. Listen, we try. Just pay for a black belt and just walk into my gym. Like, what's up? I went to another gym real quick, got my black belt, and now I'm back. I would get beat up so fast, dude. Like I roll with some purple and brown belts, and I can't really touch them at all. Like they will foot lock me. One of them got me in like an ankle lock or like a foot lock, and he literally rolled over and gave me his back, and like had my foot underneath him. So I thought I was in a good position, and then he just cranked on my foot, and I tapped. It was horrible. He's good though, really nice guy. Anyways, let's get back to stocks. What's up, Alvin? Hi, John. What is the difference between cross and isolated on futures? I'm not sure what you mean, Alvin. Anyways, guys, we got 7 minutes. 7 minutes. So it's actually an interesting day. So again, we got non-farm employment data coming out in 7 minutes. 15 minutes later, we have jobless claims, unemployment filings dropping at 8:30. Okay, so again, in 7 minutes, we've got non-farm employment prelim payroll numbers. We'll see how this affects the market. Maybe it affects it positively. We don't know. We'll see what the data shows up. Non-farm payrolls are expected. Let me put this up on screen. So yeah, non-farm payrolls are expected at 160K. 160K. I'll put this up on screen. $8.15. Yeah, so again, will it come in higher or lower? Put this up on screen. Prelim non-farm payroll data is expected at 160K and drops at 8:15. Use an analogy of martial arts to the stock market. trying to think of the best analogy for it. You could use the analogy like this, okay? In jiu-jitsu, just like in trading, it's very difficult in the beginning. Most of the time you get beat up in jiu-jitsu. You know, the first couple months you're there, you're losing to almost everybody. Um, and then you start to get better and you start to show some progress. And then that motivates you to continue doing it. Just like in trading in your first few months and probably longer, you're going to lose money. You know, you got to protect yourself at the beginning of trading, though, and trade small, trade with the demo account, do whatever you got to do to protect yourself because you're probably going to lose money. Just like in jiu-jitsu, you're probably going to get beat up in the first couple of months. But after that, you start to show some success, and that'll be a skill you have for the rest of your life, you know, in either one. And so in trading, that's something that you got to devote a lot of time into. The biggest problem with trading in general is that traders rush it. You know, the Dunning-Kruger effect is absolutely true with traders. Traders tend to think they know the most, and the less experienced traders typically think they know the most and will go around criticizing others, bragging about how great they are, like all that different stuff, right? The more experienced traders recognize how little they know and understand that nothing's definitive. It's all based on probabilities, and that's the smartest way to be in trading. But again, the rookie traders typically think they know the most. They go around bragging, being toxic, like criticizing others, telling everybody else they're not doing it right or whatever. And again, that comes from a lack of experience. Once you zoom out and you take a step back and you get a decent amount of experience, you realize somebody else might trade similar or a completely different strategy than me, and that doesn't make them wrong. Everybody doesn't have to trade the same way. For this type of stuff, guys, just be careful. Like we got over the next 30 minutes, we've got multiple different data releases coming out, and it really is going to be a pretty busy time. And so I would be very careful in positions right now, especially shorter term positions, because again, the prelim non-farm payroll data comes out at they're expected at 160K. It drops at 8:15, so in 3.5 minutes. So you just gotta be careful. The real question is, what does the market want? Does the market want economic growth, or does it fear economic growth? 43. We're actually pretty split down the middle. We got over 400 votes. 43% say they want economic growth. 42% say they fear economic growth. What did Powell say Friday? So he spoke yesterday, Larry. So he spoke yesterday. To me, he was kind of dovish. Like to me, he seemed dovish, personally. What do you guys think? Was Powell dovish or hawkish in the speech? To me, he seemed dovish. He seemed like he was optimistic, still taking a data-dependent approach, didn't want to rush things. But yeah, he seemed dovish to me. Q, break it down ahead of this prelim data. Who fears growth? The Fed. Fed fears economic growth because that means inflation. So again, if you don't understand, so economics-wise, I'm going to do this quickly here. We got about 4.5 minutes, 3.5 minutes. Okay, so basically the Fed doesn't always want economic growth. You might look at this and say, oh, well, isn't economic growth good? It's not always good. Too much economic growth means inflation spikes. And over the past 5 years, prices have gone up so much, people are genuinely unhappy about it. They're super unhappy. That's why most people are struggling, is prices are freaking ridiculous right now. And so the Fed controls this through interest rates, by raising interest rates if they want to discourage the economy to bring inflation down, and by lowering interest rates if they want to stimulate the economy, increase spending, and help those things. But the consequence of a thriving economy is inflation. And so right now, inflation is up a lot. The Fed's actually been trying to push the economy down as opposed to stimulate it, which is what they did in 2020 after the pandemic. They stimulated the economy, and that's where we got the 10% inflation and all the ridiculous inflation spikes over the next few years. And so now the market doesn't necessarily want economic growth. That can signal more inflation problems. And so it's super nuanced. It's not one or the other. We'll have to wait to see how the market reacts. And again, with this prelim payroll number, again, I don't know which it's going to be. I think lately it's actually been back to normal, where the market's been reacting positively to economic growth and negatively to less economic growth. But again, it's not definitive. Not an investment professional. Be smart, be safe. Nobody knows what this is going to be or what this is going to show up as. And again, you just got to be smart and safe here, chat. Crypto is done for now. Yeah, it's not a 60K. I don't know if I'd call it done. But I thought dovish too. Rate cuts are on the table with good signs of current data. Yeah, for sure, Key. That's what I took away from it, is that he seemed dovish. And again, it's an election year. And so what do I mean by that? What I mean is that it's an election year, and he's getting pressure to stimulate the economy, which is a dovish thing. Like dovish means stimulate the economy, bring interest rates down. All right, guys, hit the live button next to the play button. We got about a minute left. 10-year yield spike. Nvidia. Nvidia's down a little bit, but all right, here, this timer's a little bit off. This timer's a little bit off. Again, I'm gonna do the countdown myself. We got about 50 seconds left. 50 seconds. All right, so here's Tesla. I'm gonna put the dollar index up, and maybe again we got gold up. There's the Dixie. Dixie's at 105, 60s. There's gold. All right, guys, 30 seconds. 30 seconds. Bro, you remember when we went to 14K people in chat with Nvidia? Yeah, I remember that. All right, guys, 20 seconds. 20 seconds. Again, 163 to 160 is what I'm expecting. Hit the live button next to the play button. Make sure you're fully caught up in chat. Again, we also have jobless claims dropping in about 15 minutes. All right, here's the report right now. So there's 150,000, 150K, lower than expected prelim payroll numbers. 150K is what the data showed up as. 150K versus 160K expected. So actually lower payroll numbers than expected here. Lower payroll numbers than expected. The Dixie's dropping, which means that maybe the market's going to move up from it. Look at the Dixie fall. Here's the Q. Let's take a look at the SPY, but 150K is what we showed up as. 150,000 is what we showed up as. 150K. All right, so again, jobless claims, unemployment drops in 30 minutes or in 15 minutes. All right, so again, jobless claims, unemployment drops. So again, the market is mostly stagnant here. Maybe it's waiting for jobless claims, unemployment. So again, this is the prelim non-farm employment change data. The big data drops today, chat. The more important data, I'll say, is the jobless claims report that drops in about 15 minutes. Again, it came in, the U.S. non-farm employment data showed 150K versus 160K roughly expected here. Put this up on screen. There you go. And again, jobless claims, unemployment filings drop at 8:30 right here. Hope unemployment is just as expected. Dixie has gone reverse. Yeah, I see the dollar index fall down in this report. Honestly, it's interesting though, because the market is kind of following the Dixie here, which is opposite of how it normally is. Like typically the dollar index and which is, you know, the dollar and the market moves inversely to each other. So it's interesting how yeah, so it's interesting how they are moving like with each other. All right, so we got 13 minutes until jobless claims, unemployment drops. Be ready, chat. Again, we'll see what we get. A little bit less than 1,000 people here, but all right, guys. So again, the Dixie falling down big here. Nvidia started to bounce. All right, guys. So again, we did have the NFP data drop. So we got unemployment, jobless claims numbers coming out today, chat. Remember, jobless claims, unemployment files soon. else we got? Yeah, we got non-farm payrolls. Again, look at the Dixie fall here, big on this data release here, chat. Look at the dollar index dip. Again, we got jobless claims at 8:30 today. 8:30 today. Again, so the expectation here. No, Juan, sorry, brother. The expectation here is that, so to understand this, jobless claims is how many people are filing for unemployment week to week. So this is a weekly report coming out in 10 and a half minutes, 11 minutes, a week to week report. Again, this is how many people are filing for unemployment. Payroll numbers showed less economic growth, which again is a hawkish thing. It's good. In terms of inflation, it's good. So it signals more of a need to cut rates and less of a need to combat inflation, right? With less economic growth. If economic growth was thriving, it would signal, or actually it's the opposite, I'm sorry. So this data release signals, so payroll numbers coming in lower than expected signals less economic growth, maybe more of a need to cut rates, less of a need to combat inflation. But again, we'll see what jobless claims shows up as well. Always come to your channel for the reports and news. Keep it up. Always can rely on you. Yeah, I think a lot of people watch this channel because they know I'm reliable with it. Like, we cover it very quickly relative to everybody else. We've got some sources that give it to us fast. Personally, I think the market is more fearing a major recession at this point than inflation. Again, it's all good. I disagree. But what makes you think that? What makes you think that the market fears a major recession? What signs do you see of a major recession here? I guess is the point. Typically, signs of major recession are high unemployment, too little economic growth. You're always on point, man. Thanks. Yeah, all good, brother. Inflation is still way too high. Jobs are the last thing to go. Then we go into deflation. Less folks have jobs. Less people spend. Companies don't have good earnings. Stock prices fall. Yeah, I agree. I think inflation should be the priority because, again, a lot of people, we get a lot of pressure from like realtors. And again, I'm a real estate agent, but we get a lot of pressure from realtors, especially from like mortgage brokers and lenders. They're the ones that really genuinely say, yeah, we need to cut rates. We need to bring interest rates down. We absolutely don't. House prices can use a correction. Auto loans can use a correction. Like, they're up ridiculously. They're in a massive bubble and they've been that way for years. Nobody needs prices of real estate to go up more. Again, I think right now inflation has been really bad. The real reason people are unhappy is not because of lack of economic growth. People are finding jobs. The real reason people are unhappy is because of inflation. Prices have gone up so freaking high over the last few years. Inflation has gotten so bad over the last 5 years. That is the root cause of people's unhappiness right now. And it's the opposite of a recession. It's too much spending has occurred over the last 5 years and inflation got really bad. And again, once prices go up, they do not go back down. That's the big thing people have to understand. If prices go up, they're not coming back down. You're not going to get them to actually go down. The best we can do is slow it down. And that's the best case scenario. And so with that in mind, we need to control inflation. We can't pander to lenders by bringing interest rates down before they're ready. And now it's different if we see signs of genuinely worrying signs of a recession or depression. That's a different thing. Okay, if we start to see those, I agree we should start bringing rates down. I don't think we see that right now. I think we see normal corrections, which are necessary. Mortgage brokers turn to Uber drivers with 8% rates. Yeah, 100%. Yeah, I know a couple that kind of got really weird. And again, I think sometimes when you're desperate, you lash out at people. But I know a couple that got really freaking weird after interest rates went down or interest rates went up and they stopped doing the business that they were doing, I mean, listen, I'm not saying prices never go down. Okay, what I'm saying is that we can't hold our breath for it. Like, prices are not going to go down usually. The best we can do is to slow them down. Again, we can look back at history. The easiest way to look at it is a CPI graph. Right, so here's a CPI graph. I showed this graph a lot because it's important for people to understand, like, to get the point across. Okay, so here is the last 20 years of inflation. Okay, there's only been one major time in history in the last 25 years where prices have decreased for a very small period of time. Very small period of time. And then what happened? They pushed right back up. And so again, once prices go up, they're not coming down. We had a little bit of a dip here negative, but again, we shot right back and then boom, 10% after 2020 and the quantitative easing that we got and the money printing. Inflation spiked up to 10%, roughly ridiculously high, and people struggled. And so again, we got to control that inflation. We can't again, real estate agent. Real estate needs a correction. I don't understand how people don't see this. Real estate needs a correction. Prices have doubled. That's not sustainable. It needs to correct. High interest rates is not hurting in that regard. Yes, I understand real estate agents, lenders are unhappy. It's hard to sell homes when rates are so high. I get it. I feel for it. I do. We still shouldn't bring interest rates down. Again, we gotta manage things. People think they're unhappy now. Imagine if inflation spiked another 10%. Then people are really gonna be unhappy. People are really gonna be mad if inflation spiked again. So we have to control it. We can't pander to lenders. We have to control inflation. And because of that, we should push back rate cuts as long as possible until something starts to really break. And if we go into a recession or depression, it is what it is. But we need to combat inflation first because prices aren't sustainable. And before we know it, prices, if we get weird with cutting rates too soon, prices are going to get worse and worse and worse and worse. And then people are really going to be unhappy and they're going to be yelling about prices. Economy is a lot worse. Maybe it is creative. Again, I'm not disagreeing with you there either, brother. Of course, the data is going to be influenced. And so, again, I'm not even disagreeing with you there, dude. What I'm saying is when I look around, when I talk to people, when I see people have jobs, people are working. The biggest risk to the current economy is inflation spikes, in my opinion. But again, everybody has their own story. It's all good. I get it. We can agree to disagree there. So 60 minutes until jobless claims unemployment filings drop. Inflation is easily over 10 when you actually factor all the necessities government only personally leaves out. Yeah, I mean, food and energy. People like to look at core PCE. Food and energy are relevant prices, though. People are really unhappy. The biggest reason people are unhappy is because of food prices. Food is up so much. It's expensive to buy food now. And so people like to look at core, which excludes food and energy, like gas and food. But I think it's one of the more necessary looks that we have to pay attention to. I'm not suggesting cuts, but the other side is many people are living on credit cards and defaulting due to high rates. I know, but then they need to. That they're making bad. I get it. I'm not judging them. But we need to control inflation. Again, if people think they're unhappy now, if inflation spikes up, again, people are really, really, really going to be unhappy. Chat. That's just the nature of things. That's how it goes. People are genuinely going to be unhappy of that if we get inflation spikes. Yeah. CPI comes out next week. I believe it's next week. I'm pretty sure it's next week. CPI almost always, if you want to track economic reports, CPI generally always comes out around between the 8th and the 15th of the month. Between the 8th and the 15th of the month. So I think without even looking at anything, most likely next week. Yeah, next week. CPI drops Thursday next week. Friday, we have PPI. All right, chat. We got less than 2 minutes here. Chat, less than 2 minutes. We got about a minute and a half left. Yeah, this timer's a little bit off, so I'm just gonna get rid of it. Again, I'll count it down and stuff. We got about a minute and a half left. Hit the live button next to the play button. Make sure you're fully caught up on stream, chat. Again, we also have the Fed minutes report today. We got about 1,000 people here live. Hit the subscribe button. I'm gonna put it in sub only mode. I don't think I've done that today. So again, if you haven't already subscribed, I appreciate it. There we go. We are now in sub-only mode. Again, we got jobless claims unemployment filings dropping in about a minute here, chat. About a minute. The dollar index is neutral. The SPY is dumped on on payroll data. Nvidia is still trying. Gold at 2350s, 2360s. Again, jobless claims are expected today, guys, at 243. 243. Or no, I'm sorry, 234. 234. We got 50 seconds. Again, hit the live button. Hit the notification bell. We appreciate it. Got about 1,100 people here. We got 40 seconds left. Kind of hard to agree with you when my family is struggling because of higher everything. Yes. I mean, again, though, but you're not listening to me, I don't think, Jeremy. I agree. Higher everything is here. But again, in that regard, what you want, if you don't want more higher things, is you want inflation to be combated first, brother. That is what I'm saying. Inflation is a problem. All right, here's the report. Jobless claims, Chad, showed up at 238,000, higher than expected jobless claims. More people filing for unemployment week to week. Higher than expected jobless claims. More people filing for unemployment. Let's see what the SPY does here. Again, market liquidity is a little light today because of too little people working. Again, 238. What they showed up as 238 versus 235 expected. Higher than expected filings. More people filing for unemployment than expected. Less economic growth. The dollar index is falling down from it. The SPY actually spiked up a little bit on this report, which is interesting. Yeah, again, here's the jobless claims numbers right here. And again, there's the dollar index breaking down here. Nvidia is actually shooting up on these numbers, which is interesting. The SPY hasn't really moved. But again, I think when people are struggling, they lash out. I never talk about how much I make ever. I'm not sure why people are even bringing that up. I might say I do okay, but again, that's usually in business conversations where I'm trying to show people to monetize what you're interested in and how to build that type of stuff. That's usually more of trying to help people. But again, I think if people are struggling, they kind of lash out. The reason I think we should not focus on bringing interest rates down. If you think bringing interest rates down is going to help your family from struggling less, you're wrong. Bringing interest rates down is going to cause inflation to get worse. It's going to cause inflation to get worse. It's going to cause the stock market to most likely dip, and prices are going to be higher after rates go down, not lower. You're going to pay more after rates go down, not less. That's the thing people have to understand. When prices go, when interest rates go down, people spend more. And when people spend more, prices go up. Businesses raise prices because they can. That's the nature of things, supply and demand. And so cutting rates will make prices worse, not better. So if your family is struggling because of higher prices, you should agree with me here, which is that prices are too high, or is that prices are too high. We can't cut rates to help real estate agents and lenders. Bringing rates down is going to help banking. Okay, it's not going to help the everyday person unless they're specifically trying to buy a home, which if you're really struggling financially, you shouldn't be. And so again, real estate agents, mortgage brokers are really the ones that are genuinely struggling over the last 3 years. We can't pander to them. They're going to have to deal with it. Real estate's already in a massive bubble. It's up over 100% in the last 5 years. It needs a correction. Rates should be high right now. Anyways, the dollar index breaking lows. SPY really didn't react to this at all. Gold spiked up a little bit, so maybe people fearing, everything else, they're going to a safe haven of gold. Gold spiking up to 2360s. But the prices will never go back, so why don't cut rates now? Because prices are going to be higher afterwards. And they're never going to go back down. Right, all my friends talk about what they're doing next, what they're investing in. They talk about gains and losses and ideas, basically how to make money off the money they have. Right, that's what you do. But again, people say you brag or whatever. Again, it might be the same person. The name kind of matches, but again, uh, in the end, guys, like finding somebody to lash out at online, it's not going to help you. Like you got to figure out how to build up your own situation. Like obsessively hating on somebody else is just not going to do anything for you. It's going to take away your happiness. Find something else to do. I've like I said, I've never hated on anybody in that way. Like I might dislike somebody. If I dislike them, I just don't watch them. You know, uh, I've never disliked somebody enough to where I spend my time going to stream, like hating on them or doing whatever. That just seems odd. I don't know if there's a better way to put it. Just odd. Dollar index flushing down here, chat. Flushing down. Yeah. Also, guys, if you haven't already, check out my sponsor, Apex. This is the first plug for a sponsor I've done all day. We've been streaming for hours. First plug I've done all day. We still got over 1,000 people here. Again, check out Apex. The 80% off sale ends in 6 days. What Apex does is it saves you money if you're learning how to day trade, most likely. Again, most day traders lose. And so if you put up $5,000 yourself trying to day trade, you're probably going to lose that $5,000 or at least thousands of dollars. Instead of risking that, try a funded account program in futures. In futures, the patterns are very similar to blue chip stocks. I can essentially day trade the SPY and Q price action. I can also day trade gold. Patterns are very similar to blue chip stocks. There's no PDT rule, and it's a great way to learn day trading because these funded account programs are allowed. What Apex does is they give you a demo and they test your skill with a demo account. And so they give you this base one for 25K in funding if you pass it. They give you a 25K demo if you can make 1,500. Very small ratio, 1-to-1 ratio as well. If you can make 1,500 without losing 1,500 and following their rules, if you pass that test, they fund you 25K with a 90% split. So once you're funded, you're keeping most of your profit afterwards anyway, as long as you follow their rules. And if you fail, you're only out about 35 to 40 bucks. If you use my link, you get about 30. You get this for about 35 to 40 bucks. It also includes real-time data. If you were going to pay for that data in a paper account yourself, it would cost about the same as this challenge. So the value is there. For the time being, you can also get the 150, 250, and 300K challenges for the same price, 35, 40 bucks, if you use my link and coupon code BT. And again, Apex has paid out hundreds of millions of dollars to their traders. They paid out over 200 million to customers since 2022. So again, if you want to check them out, I'll put the link up. Great way to help support this channel. They are a sponsor of mine. They pay me money. So I'm biased in that regard because they pay me money. If you want to check them out, here's the link. Use coupon code BT. Also, guys, understand CFTC 4.41 hypothetical or simulated performance have limitations. Unlike actual performance, simulated results do not represent actual accounts. Also, they since the trades have not been executed, the results may have under or overcompensated for the impact, so forth and so on. Understand this rule, guys. Understand this rule. You hate on me because I'm the top 2, dude. I'm top 2.5. Yeah, sorry. Catch back up in the chat. I agree, but being propped up by government spending, what will happen when that has to stop? Worrying. Yeah, for sure. Where's Tesla at right now? So let's see. Tesla's been making dollar index is breaking down here. Tesla coming all the way back down to 230s. Gold is ripping up. So look at gold move. Lost all my friends because we go on vacation and have decent stuff now. Crazy how people get jealous real fast. Yeah, dude, like it genuinely happens, bro. Like I'll tell you guys a story. So I was working with this guy. This guy was friends with a couple. This happened with a couple different people. Like people secretly resent is what it really is. I was working with this guy. This guy was my son had a friend, and this was my son's friend's dad. Well, he starts coming over working with me, a little bit. And so he starts asking me questions about my businesses and like all this different stuff. And so I'm like kind of talking to him. Eventually you just get, I'm not even going to tell the story. Point is, people get jealous. They get weird. They get insecure. It's normal. It's part of life. And it's really hard sometimes because people get very strange. But again, I think the easiest way to put it is that if you lash out at the people that are doing well or doing better than you, you're spending too much time and energy doing that. Like that's not going to help you. It's just going to make you feel worse, to be honest. Again, one thing I genuinely find is that when you put good things out there and you're good to people, you get good things back. I don't know why it is. Maybe we're living in a simulation, but when you put good things out there, you get good things back. If you put negativity out there, if you're constantly bad or make people feel bad, then you're just going to get that back. And I genuinely feel that way. I don't know why it is. Again, maybe we're living in a simulation. Maybe there's religious implications. I don't know. But I genuinely find that if I'm nice to people, if I'm good to people, I get good things back. And so I try to be as good as I can to people and try to do things the right way. Yeah, I'm lucky. Like my best friend in the world, he all right, guys, look at Tesla. Tesla all the way down to 233s. SPY at 548s. Nvidia at 121.60s. Here, chat. Say somebody wins and decides to force a rate cut and inflation spikes again. I think they'll probably cut rates before any candidate wins 7.5. I think they're going to cut rates. They're probably going to cut rates next month. We have one Fed meeting, not next month, I'm sorry, the month after next. So we got one Fed meeting at the end of this month, at the end of July. And then we have another Fed meeting in September, which is when most people are expecting cuts. Like most people are expecting cuts in September. Yeah, for sure. My best friend, people are weird. You find out who your true friends are. Yeah, my best friend in the world, I've tried to get him to work with me in business and in life. And he always just kind of respectfully declines. And the reason he declines is because he says, look, you're my best friend. Like businesses can ruin friendships. They genuinely can. And so he's like, look, I know I could probably like do well working with you and everything like that, but I'd rather not put more pressure on our friendship that needs to be there. And I respect that a lot because again, most people are not like that. Most people are the opposite, where they don't really care about the friendship. They just want to do well. Tesla overrated or underrated? It depends on the time frame. Tesla will close under 230. Yeah, market closes at noon. Fake friends ask for money. Real friends ask you to show them how you're making that money. I don't know. I think real friends don't want to take your money or don't want to get involved with you in that way most of the time, unless you need help. I have a very diverse set of friends. I got a lot of friends too. Most of them are fine. Some of them are weird. That's a good question. Do your friends get jealous or envious if you do well? Again, the rule I try to have is that if somebody gets upset when I do well, they're not my friend. And that's made me kind of cut out a lot of friends along the way too, because if somebody gets weird with me about doing well, they're not my friend. Not unless I'm like really obnoxious with it, which I'm not. Like I don't even talk about it. Like on social media, I don't even tell people about this business. Same reason you never lend a family or friend money. I mean, I give sometimes I help my mom out. Like I'll give my mom some money, but it's never a loan. Like I'm just kind of giving it to her, and she doesn't need it really, but like sometimes she'll ask, and yeah. But I'm not lending money to anybody. If I give money out, I'm just giving it. Lending is sketchy. Lost a lot of friends of the years through doing well. I think a business is a way to help friends and community get themselves jobs. Well, it depends. No, that's exactly right, BB. 100%. He would say, I would just say that your friend who doesn't want to get involved, maybe he's just not passionate about it. He's not, right? He's not passionate at all about it. So, I mean, yeah. But again, just because they're not passionate, I would rather, like, I've gotten involved with a lot of people who weren't passionate about it, who you find out later on they weren't. Envy is healthy to a point. Well, if it can drive you to be successful, sure. Nvidia coming all the way down under the VWAP and then bouncing right back. Gold is about to test highs again. Should I buy this dip in the SPY? I think I'm going to try to. Yesterday I did the same type of trade. Okay, this should be good. All right, we're in 25. Let's see, 50, 75, 100, 150, 100. Yeah, there we go. We'll keep 150 shares. Do a small little range bound trade. We're hitting the 200 EMA right now. I think that's a really nice little bounce spot if we can catch it right. And again, I'm not telling you what to do. Do not copy me. Not an investment professional. It's hard to spot genuine envy. Yeah. I'll lend my brother a hand because I know I can. Sure. As always, trades at a high PE ratio. What's his PE ratio right now? Yeah, Elon. The problem with Elon is that, like, in business, you have to stay politically neutral, and he doesn't, and that's a risk. Definitely a risk, because if you're selling things to consumers, like, the public is pretty split down the middle politically. So if you're selling things to consumers and you get super polarized to one specific political side, half your consumers aren't going to want to buy your stuff. It's dumb. It doesn't make any sense. Now I think what Elon's betting on is like a lot of support from the other side might compensate for it. Is probably his plan. But again, I disagree. But again, I'm pretty neutral politically in the end anyway. But yeah, we'll see if it works out for him. I think there is a risk. It's creating enemies. Yeah, for sure, BB. 100%, I agree. Under Armour almost went under for, yeah. So where's Under Armour right now? Like I saw Under Armour stock. Under Armour super cheap. Under Armour has had like a slight resurgence lately, though. I would argue. All right, so we just cut half of or a third of the position on the SPY. We bought the dip. We're kind of riding it up a little bit at the 200 EMA. Yeah, I don't know if it's good or not. Yeah, sorry, I had to ban this guy PNB. You could tell he's just sitting around. Like, is this a therapy channel? Like, my guy's big mad over there. Let it out, bro. It's okay. All right, so we're gonna go ahead and take a little more off here. We got 75 shares left. I listen. I appreciate my channel. Now that the economic data is out the way, we're kind of sitting here trading. I like talking about whatever I want to talk about. Like, we're gonna talk about anything and everything. And again, if I sat here quiet and didn't say anything and only talked about stocks, people would say, "Oh, you're too boring," And so we diversify the channel and make it. We talk about all these different things because I think these are fun conversations, and I think a lot of people tune in because of these conversations. And we also track markets and follow economic data. So, anyways, the SPY pulling back some. We made a little bit of money, but it's small. You make money from YouTube, yes. But we got a bunch of income sources, but yes. Bitcoin. It's my early morning spot before market opens. Yeah. I think a lot of people do this with this shit. Bitcoin, I don't know, man. Bitcoin obviously is on a pullback. I think the dip is probably pretty decent as well. But I also think Bitcoin is volatile, and I think the only way you can really look at it is super long term. Like, I think you have to look at Bitcoin in terms of like a long term investment more than anything else. Like, I think it's very difficult to swing trade Bitcoin in terms of predicting short term price action. But I think long term, I think that is where that's where the gains are going to be. But again, I'm not 100% not telling you to buy anything. Always doing your own assessment, trade responsibly. I'm not sure what it's going to do long term either. I might be wildly wrong about anything and everything I say. Do not copy me. Not an investment professional. Not liable if you lose. Go ahead and add another little piece here. Put 100 shares in and see what happens if we break lows. We probably get out pretty close to break even here. Stay authentic. We like the channel for the way you're doing things. Don't change. We appreciate all your topics. Haters will hate. Yeah, for sure. I appreciate it. We got a lot of supporters. The haters are just louder sometimes. But again, like I use it for content. It's interesting to go back and forth with them sometimes because that adds another element of like Discord conversation. Uh yeah, for sure. Channel is good. Others talk for the sake of talking and just end up giving false info. This show is chill. Props. Hey, thanks so much. So again, I'm looking at the poll. We got 800 votes on the poll. 42% wants economic growth. 42% fears economic growth. 16% say they want to just see results and that I'm cool. Uh, every day before and after is therapy with John. Yeah, that's how we do it. Kind of is when you think about it. That's partially why we're here. Honestly, more power to me, I guess, if that's the case. Let's fly. So jobless claims are higher than expected may pressure Fed to ease up on inflation, right? Maybe. It might signal faster cuts with less economic growth is essentially what it is. So like less economic growth means potentially faster path to a cut for the Fed. But it's not 100%. So, again, jobless claims is a weekly report. A few weeks back, we were talking about movies, not stocks. Yeah, I'm a big Quentin Tarantino guy. I like QT, not quantitative tightening. I like Quentin Tarantino. I like quantitative tightening right now too, to be honest. I think it's necessary to combat inflation. But if we're talking about movies, I like Quentin Tarantino. I like Scorsese as well. Big Scorsese guy. I like almost all of Scorsese's movies. I like Christopher Nolan, except for Inception. I wasn't a big fan of Inception. A little bit too complicated. I also didn't like Oppenheimer as much. I thought the first 2 hours of Oppenheimer were good, and then it got a little redundant. Right, exactly. Sublime. I agree. He said the miss isn't big enough to move interest rates either way. Yeah, and it's a weekly unemployment report, right? So it's not something that's going to be super impactful. The more impactful report is going to be Friday this week. So Friday of this week, we have the non-farm employment, or we have the non-farm payroll report and unemployment data coming out. Flies, man. Flies are really interesting. They can kind of slow time down. So you think you're being quickly, they can almost move. They can slow time down. Oh, we also have services PMI today as well, chat. Yeah, we do have services PMI. In your opinion, what's the best documentary you've seen? I always liked the documentaries on the 2008 mortgage crisis. I always thought those documentaries were super interesting. The movies like Too Big to Fail are really, really good if you haven't seen them. I always thought that's kind of what got me interested in economics, was like studying the 2008 mortgage disaster. I always like my favorite type of documentaries are like early tech life, like looking into how the originals in like Apple, like Steve Jobs and Apple created Apple, or Bill Gates created Microsoft, or the early 90s where the internet was first taking off and becoming a thing with like Netscape and Microsoft battling it out and like stuff like that. I always was interested in tech in that way. And so those type of documentaries were always the most interesting documentaries for me. But it's subjective, it's opinion based. I'm going to be interested in different things than others, and so yeah, Too Big to Fail is the movie about the what Too Big to Fail is actually about was the I believe it was about the Fed chairman at the time. Yeah, it's about the fall of Lehman Brothers, Bear Stearns. Yeah, it's about the U.S. Treasury Secretary, actually. Sorry. Really interesting story. Really good economic stuff too. I'm going on a bike tour and I'm gonna tune out news for a bit. Do you ever do that? No, I mean my work, like we're kind of a media channel. Like we're kind of like a news source here. So I wouldn't be able to tune out news, unfortunately, because it's too relevant to my job. And Ron, super interesting. Yeah, for sure. Big Short, great movie. Big Short's not a documentary, but Big Short is actually what got me involved in markets. Uh, because the Big Short came out. I was a poker player. I love chess and like checkers and stuff like that. Poker. Saw the Big Short. Realized I could do a very similar thing in stocks with a bigger scale, and so very quickly started learning about stock market and day trading and investing. It's what got me started. Went and saw it in theaters without even knowing what a short was when I walked into that movie theater. Came out super passionate about it. And that movie will do it to you too. No, no, I know. Tune out is what I was referencing. Uh, yeah, it's close to a documentary. It basically breaks it down. I would argue Big Short is actually probably a documentary. It's a mix. So it's a movie, but they pause the movie at different types. They explain what's going on. They explain what really happened, and they have like different guest speakers that come on, like Anthony Bourdain. They had Margaret Robbie, or what is that her name? Whomever that is. And they had a lot of big guests come out and kind of explain. It's very similar to a documentary. Derivatives market is super interesting as well. So if you don't know what derivatives are, that's what they use to short these markets. Derivative just means you create it, right? It means it's more obscure markets that you have to create these investments in these trades. And so it's kind of like a market. An example of a derivative contract would be like if I wanted to bet on, let me think of a good example. If I wanted to bet on a more obscure metric, like maybe who wins the presidential election, or uh, if I wanted to bet on some very obscure thing, like what GDP shows up next year, I could go up to a bank and have them create a derivatives contract around those different, like, around those different sides and around that trade. So just more obscure things. And there's some really interesting stuff in the Big Short, like the Brownsfield Fund guy. I don't know if that was their real name, but they would basically play long-term options on super unlikely things occurring that were really cheap, right? So they got these options for really cheap on these things that didn't happen very much. They would bet on things that had a very low likelihood of occurring, and they got them for really, really cheap. And so the logic of the movie is when they lost small. But when they won, when they were right about these super unlikely things happening, they won big. And they grew their fund to multi-million dollars trading just like that. Now I'd have to go a little bit more in depth and research what kind of trades they were actually getting involved with, but they did a lot of stuff like that. And they were also ones who bet on the mortgages failing in 2008 and made billions, millions. No, they made like, I think they made like $100 million or something around there from mortgages in 2008. John said, "Flies slow down time." Don't they? I don't think I've ever opened up Chat GPT fast enough here. uh, uh, yeah. They perceive time differently due to their fast visual processing abilities. So they have a much higher flicker fusion rate, which is the speed at which they can process visual information compared to humans. They can perceive up to 60 flashes of light per second as individual events. They can process around 250 flashes per second. It means that to a fly, movement that appears quick to us are perceived in much more detail, almost as if this time was moving slower. So basically, when you go to swat a fly, That fly sees it coming. The reason you can almost never do it with your hand, at least, is because that fly is on it. Like he sees it coming from a mile away and can get out the way fast, and it's not even a thing to him. So that's what it is. They don't technically slow down time, but it's similar to that. Anyways, Tesla moving up to 235s here. So Tesla bouncing back a little bit. We're still obviously in this downward trend here. Obviously in this downward trend here. Chopsticks for sure. Definitely need chopsticks. You know what they would bet on? I'm not sure. Look it up. I don't think they were actually called Brownfield. I think they were called something else too. Look up the Big Short Brownfield Fund and research it. Yeah, let me use AI. Let me see. The Big Short. Not Siren Capital. Not Burry's Fund. The other guys who worked with Brad Pitt character. Charlie Leday and JB Mai, who worked with Ben Hockett, operated under a fund called Brownsfield Fund. However, in reality, their fund was called Cornwall Capital. Example of trades made by Cornwall Capital, excluding mortgage. All right, so it says Cornwall Capital, founded by Charlie Ledley and Jamie Mai and Ben Hockett, was known for making highly strategic contrarian trades that often involved asymmetrical risk-reward scenarios. Some notable trades made by them, excluding the 2008 mortgage, include shorting Capital One. In the early 2000s, Cornwall identified vulnerabilities in the subprime auto loan market. They anticipated that Capital One, a significant player in the subprime lending space, would suffer as defaults increased. They purchased a put option. They purchased put options on Capital One stock, betting that its value would decline as the subprime auto loan market weakened. They betted on the VIX. They made a bet on volatility by purchasing call options on the VIX. They believed the market was underpricing the likelihood of future volatility spikes, and this trade paid off when the market experienced significant turmoil, causing the VIX to spike and the value of their options to increase. Greek debt crisis. So during the European sovereign debt crisis, they saw an opportunity in the mispricing of Greek debt. They bought credit default swaps on Greek government bonds, anticipating that Greece would default or that the value of its bonds would decline significantly. This bet paid off as the crisis deepened and Greek bond prices plummeted. In the automotive sector, prior to 2008, they recognized structural weaknesses in the automotive sector, particularly among companies heavily reliant on consumer credit. They took positions that would profit from the decline in stock prices of automotive companies as credit conditions tightened and consumer demand waned. In the mid-2000s, Cornwall identified a bubble in the Chinese stock market. They took positions in various Chinese equities short, betting that the market would correct sharply. This trade was based on the analysis of unsustainable growth rates and overvaluation in the Chinese market. So those are a couple identified examples of, again, what was called Brownfield Fund, which was actually called Cornwall Capital. But you can kind of see how they're making bets on unlikely things that are cheap bets. These bets are probably cheap for them to get involved with. But if they're wrong, small losses. If they're right, big volatility and big profits from them. And so that's kind of what they do. That was Brad Pitt's character. So Brad Pitt's character was Ben. Ben Rickley, if I remember correctly. I'm trying to think. I think that's what it's called. Ben Rickard. Yeah, Ben Rickard. Who is not an actual person. It's based on Ben Hockett, who worked on Cornwall Capital. Worked with Cornwall Capital. Yeah, all good, baby. Anyone here in Jamaica? No. All right, guys. So we got the opening bell coming soon. We do have services and non-manufacturing. We got 20 minutes, guys. 20 minutes. Investing for me is a hobby. I'm okay with just winning 40 bucks. Sure. That's how it started for me as well, you know. Um like it was just a hobby for me too when I got started. But again, that's the way it should be. It should be something like you're passionate about. If you're interested in it, great, you know. But in order to get good at it, you got to be passionate about it. Bitcoin falling down some. Look at that demise. And Bitcoin gold. Gold pulling back some now. I'm still in the SPY long with 100 shares. How much will Bitcoin drop? Nobody knows, really. We can only speculate, but nobody really knows here. But yeah, Chat GPT. Like, you want to see one of the use case arguments for AI? Look at what it did. I talked about the Big Short. We talked about Brownsfield Fund. We used AI to look up what the actual fund's name was, and then we used AI to very quickly reference examples of trades made by Cornwall Capital, which is Brownfield's fund, within 5 minutes or less. So that is the use case argument for AI. That is why NVIDIA has been skyrocketing for the last year and a half. It's why Google, you know, Amazon, all these tech companies are up big, and they should be, because AI is a ridiculously powerful technology that if you're not using regularly, you're missing out. Nope, you don't brag, bro. That's absurd. You must be a little delayed in the stream, Chris. Hit the live button next to the play button, brother. Hit the live button. Catch up on stream. Again, I don't think I brag. I think I talk, and I think sometimes I talk about like. And again, most of the time I'm using it as like a credibility thing. So I'll say, hey, this is what you can do. You can do this, this, and this. And I did that, and now I do this, or now I make this, you know. But I never talk about how much I make ever. I very rarely talk about how much I make. I might say I make good money or I do well, but again, I'm pretty sure if I talked about how much I make, people would get weird, even weirder, and so I avoid that if I can. It's not about how much I make; it's about the point. And like building businesses takes time and energy, and you know, stuff like that. Speak with confidence. I was happily winning $2. Yeah, I never liked the Russell B. The Russell small caps, you know, again, small caps get a lot of new traders involved because, and again, when I first got started trading, I traded small caps. The problem with small caps is that most of them fail. Okay, you invest in a blue chip company. Yes, they're more expensive, but when you invest in a blue chip company, if you hold it long enough, you're probably going to make money. If you invest in an index fund, if you hold it long enough, you're almost certainly going to make money. And with small cap stocks, that edge is not there. And I play off that edge a lot. I play off of it when I buy swing trades. Like if I could buy an extended swing trade, even if I'm wrong short term, I can usually hold it long enough and it's eventually going to go into profit. Unless I get really unlucky and get stuck in like a crash or correction or something like that. In that case, I'm usually just unloading and limiting my risk and selling. But I'm still green enough trading these strategies consistently that it compensates for the times where I'm wrong. Trading the Russell in small caps is not the same thing. Like, what's the symbol for the Russell? It's like / YM is the Dow. The The Russell is slash RTY. Yeah. So, but again, I mean, when you look at the Russell, it's also interesting to note that like it's very green on the year too. Weekly chart. It's certainly, but again, like you can see the difference in edge, right? Like the Russell's still green, but when you put up like a different fund here, like a better index fund, like the E-mini, like it's not even comparable. So I just don't understand why anybody would invest in the Russell. You can short-term trade the Russell or do whatever you need to do there, but like the percentage gains aren't even comparable. That's RTY. Yeah, you look up like the NASDAQ here, ridiculous gains. So I just don't know why people would even want to trade the Russell personally. How much money you started with? Trading? I probably started with about $4,000. Lost it all pretty quickly. Like I lost that. I put up $4,000, tried to day trade that, lost it very fast, and eventually when I started this channel, I put up $4,000. I went and saw this is the timetable of me starting this channel. I started this channel. I put up $4,000. I watched the movie The Big Short, came home, researched day trading, found Tim Sykes, millionaire students. Ooh. I just like to teach. Thought that I was about to get rich. Put up $4,000. Started day trading on an overseas brokerage called Sure Trader at the time. Lost $4,000 very, very quickly. Got discouraged from trading, but in that period of time, I uploaded a bunch of videos to YouTube. Called myself beginner trading because I wasn't even claiming to be an expert or a good trader. Again, called myself beginner trading, and lost thousands of dollars very fast. Eventually gave it up, got discouraged, and I stopped trading for like a year. Because to be honest, I didn't have the money to trade. I didn't have any money to trade at the time. While I was gone, I noticed my subscriber count started to grow. That motivated me to give it another shot. So I came back, started day trading, and the rest is history. Eventually got interested more in investing in blue chips, eventually started covering economics, and now here we are years later. But yeah, that's what happened. I bought shares. And again, I wish like the funded account programs are very useful because if you want to learn to day trade, you're still probably going to lose in a funded account program, but you're going to lose less usually. I can't guarantee how much you're going to win or lose. Nobody can, but generally you're going to lose less. If like Apex, they give you a demo, they test your skill with the demo. If you pass the test with the demo, they fund you. If you fail, you're only out what you pay for it. The base one is $35-$40 if you use my coupon code in my link. And if you pass the base one, you get $25K in funding with a 90% split. And so if you take that, you make $10K, you keep 9 of that. And they've paid out over $200 million in funding. And so it's kind of like the best of both worlds. Limited risk, but if you pass it, you get a ton of funding. But if you fail, you're out $35-$40 if you pay for the base one. Again, for the same price, for $35-$40, you can also get the 150 challenge, where if you pass it, you get 150K in funding, the 250 and the 300K challenge, where if you pass it, you get 300K in funding for $35-$40. It's just a great way to learn how to day trade. Again, most day traders are still going to lose. I'm always honest about that because that's just the truth. Most day traders lose. I try to be transparent about it. And again, they're a sponsor of mine, so they pay me money. I'm biased in that regard because they pay me money, but it's a great way to learn how to day trade. Here's the link. Check it out. It's $35-$40. Again, they're a sponsor. Remember, I am terrible and I have no idea what I'm talking about. Maybe wildly wrong about anything I say. It's for entertainment only, and my experiences, wins or losses, may be conducted in real time or on stream. May not be conducted in real time or on stream. Basically, I do trade off stream. You're not going to see all my trades. I'm not even claiming to be a good trader. Understand CFTC 4.41 hypothetical or simulated performance have limitations. The longer you hold a stock, the more you're likely to lose money. This system is controlled by the big guys. Yeah, I mean, Wilfredo, brother. I don't know if you just don't understand the stock market or you don't understand long-term statistics or what, but uh, the longer you hold a blue chip stock, the more likely you are to make money, sir, not the less likely you are to make money. Like if we can use this, we can. This is very provable. Um, like let's just look at Microsoft. Okay, it needs to be a blue chip stock. Here's a weekly chart. Say you bought this thing in 2017. It was at $50. Post split price of $50, roughly in 2017, 2016. The longer you hold Microsoft, the more likely you are to make money. And this is what most new traders get wrong, because like for some reason, like investors trade penny stocks or whatever it is, or they invest in penny stocks, and most penny stocks fail. They either trade penny stocks or they invest in penny stocks like they're Apple or Amazon, which they're not. They're going to go down long term. Or they get really hyped up, not in blue chips, but in mid cap stocks like SoFi or like Rivian, or there's a Palantir, right? These are not blue chip companies. These are mid cap stocks that haven't been around very long. And so some of them are going to do really, really well, but others are going to drop 70% and you're going to lose money. And so I think a lot of the guys talking like Wilfredo here probably are talking like that because instead of investing in blue chips, they're investing in freaking Rivian or something like that. And that's just not the same thing. Like when you invest, you got to invest in either index funds directly or blue chip stocks that you know of, like Apple, Amazon, Google, Walmart, Target, Disney, whatever else. Those are the stocks that are going to make you money long term if you hold them. And that's the biggest statistical edge the stock market will ever give you, is that if you hold these things long term, you're going to make money for the most part. I can't guarantee it. Nothing's definitive, but it's very probable. Oh, as a day trader, absolutely. Most day traders lose, sure. But that's not what you said. You said, let me go back to what you said. The longer you hold a stock, the more likely you are to lose money. Oh, if you're talking about day trading, my bad. I'm dumb. Sorry, Wilfredo. If you're talking about holding a stock intraday, that is correct. That is absolutely right. You're right. I'm wrong. You're smart. I'm dumb. You're very good looking, and I'm just not attractive. Okay, you were right. I'm sorry. But yeah. I mean, to be fair, you weren't the most specific. I thought you were referring to long-term investing before I went off of my rant. And so now I'm dumb, and that's okay. All right, guys, we got 14 minutes. 14 minutes. You can see my SPY trade's doing a little bit better, but it's so choppy right now. Probably sell a little bit. Yeah, we'll get out a little piece here. The reason I'm selling now is because we're getting closer to the open, and I just don't feel like holding this trade. I tried to make some money on it. We caught a little bounce. It's just so flat right now. It's so boring. Any blue chips or high and mid caps you like the looks of at the current state? Not really. I haven't been buying up a lot of stuff right now. And the reason I'm not is because everything's around lifetime highs. Every good company is around lifetime highs. If we look at Microsoft, it broke lifetime highs yesterday. Google broke lifetime highs yesterday. Amazon is broke lifetime highs yesterday. Apple broke lifetime highs yesterday. Walmart broke lifetime highs over the last few days. So there's not really many blue chip stocks that I'm interested in currently. They're all up way too much for me. And again, I like buying pullbacks on these companies. So what I am doing is I'm holding my current positions. I'm taking some profit on these high breaks. But I'm also not really like taking large positions on this deep extension on the upside right now. I would rather wait for dips and buy those dips as opposed to entering positions at the highs. But that's just me. You have to save some money to go back to trading. Yeah, I mean, yes. Definitely needed to. I'm down 99% in a penny stock, but holding it on the chance it goes up to recover my money. Yeah, I mean, penny stock, the market is just nasty. What I mean by that is like, you got so many people trying to push new rookie traders into buying penny stocks. This penny stock is gonna 1000x, guys. That's what they'll say. You know, again, if you look at the Wolf of Wall Street, I always reference this one quote from the Wolf of Wall Street. But if you look at the Wolf of Wall Street, what did Jordan Belfort do to sell naive consumers into buying penny stocks? What did he say? He said, "Hey, baby, here, you're going to be on camera if you walk too close." What did he say? He said, they described it as selling garbage to garbage men. You know, Aerotine International was a little shack in the Midwest, but he said it was a cutting edge firm at the Midwest awaiting imminent patent approval on the next generation of radar detectors that have civilian and military use. Like they sold it. Like if you look at a lot of these really terrible penny stocks, that's how they sell them. They hype them up, they overhype the company. You know, they sell them to naive consumers. Naive consumers end up funding the company. The stocks go down over time. A lot of the time, the CEOs of the companies know themselves that the company is not going to be successful. And what they'll do is they'll wait for it to hit highs and they'll unload their shares too, because even the CEOs don't believe the company is going to be, you know, successful long term. And so the CEOs have the option of, hey, I could either make a couple mil now and get out and ride off into the sunset, make 5 million now selling shares, or I can hold most likely a losing company. And a lot of the time they take the former. In the end, just don't buy penny stocks. Like everybody wants to play that gambling mentality. Like I'm gonna get rich if I just buy the right penny stock. It's possible, super unlikely. If it was me, I would just go to crypto. Like I would invest in some of these sketchy meme tokens or something like that. If you want to play it that way, because those are where you got really scalable, like real scalability in terms of price. Most of the coins are crap to begin with, but it doesn't matter in crypto sometimes. Penny stocks are just much less probable thing. Again, I don't think you should do either one personally, but if you want to do one of them, I would do crypto versus penny stocks. My crypto bro's trying to get me to gamble on memes. Yeah, nobody was wearing masks. Yeah, nobody's really wearing masks on my end. My first and last penny stock. Yeah. Uh, hey, yeah, y'all be safe tomorrow. Y'all be good tomorrow. Be safe. You know. Yeah, that's probably a good rule. Don't trade anything under $5 that doesn't have at least a million volume per day. S&P 500 E-mini thoughts for end of day. I don't know what the E-mini is going to do. We got non-manufacturing PMI data and we got the Fed minutes report, but the market also closes at noon today. I think it's going to be a choppy day. What I might actually do is just trade the chop like I did yesterday. I think that's probably the way. Oh no, don't turn on me. Yeah, guys, we're getting too close to the opening bell, and I want to keep this in profit, so I'm just going to cover it for a little baby gain. That's fine. I gave it time. I held it most of pre-market, and I'm green on the day in stocks. So that's nice. All right, we're gonna get ready to day trade in futures also today, chat. So let me pull this up. How's Rhythmic? I heard Rhythmic was doing better.
Hey, thank you, Jay. I appreciate it. Thanks so much. I don't think GameStop and AMC are going to go under. I don't want them to, but that is what I think. Well, I think GameStop and AMC are going to go under.
I don't know.
Are you more bearish or bullish?
I'm not really anything. I'm neutral today. Today is a shortened holiday week. We do have the Fed minutes report. We also have services PMI dropping at 10 a.m. today, and so I'm pretty neutral, to be honest. I don't think we're gonna get any type of big volatility today, and so I'm just gonna look to maybe trade like a sideways neutral range, kind of buy bottoms of the range, sell at the top. So my bet is sideways.
But again, who knows? I might be wrong. Maybe we run big. Who knows? But yeah, thanks for becoming a member, Jay. I appreciate it. Yeah. Futures open half day tomorrow. They might be, but I'm not gonna stream tomorrow. Yeah. I'm gonna take my day off, sleep in a little bit. You know. All right, so yeah, we got Rhythmic out. I think I lost money on my funded account yesterday, if I remember correctly. Oh, we're pretty green, so I don't think I lost much if I did lose some. We got the opening bell in about 4 minutes. Yeah, there's Tesla, the SPY, and Nvidia. Here's the Nasdaq and futures that we're gonna be day trading. What's going on with Disney? I'm in Disney right now. It's not a huge position, but I'm down slightly on it. My average price is roughly $100. I could add a little bit more. I don't mind. Yeah, we added a little bit more. We got 20 shares now, but yeah, it's a light position. I use Apex. Yeah. Again, if you want to check out Apex, here's the link. If you want to day trade with me, I'm using Apex funded account program. This is a 50K funded account on Apex, as you see on the left side. Great way to learn day trading. In the futures market, I can day trade basically the QQQ and the SPY price action. Like if I put up the QQQ, it's going to look very similar. Like, yeah, this looks a lot like this because it's the same thing. I can day trade this left side, though, in futures, no PDT rule. That's kind of what I'm doing. But again, they're a sponsor. They pay me money. I'm biased. Always check everything yourself. Trade yourself. Don't copy me. Not an investment professional. Solars are getting bid up. We are getting about. I was really thinking about buying this dip because we were at the bottom of the range. I'm kind of mad I didn't. Nvidia very flat. Q very flat. John, do you give out personal loans? I need 3.6 million urgently, bro. I need 3.6 million pretty urgently too, brother. Can you loan me 4 million? I mean, what about 2.5? You know, I don't make that much money, dude. You think I got like that money sitting around, bro? You're wrong. Like I'm comfortable, but I'm not making that much. I wish I was. Put it out there. I'm gonna make $3 million this year. In 2024. All right, guys. Here's the opening bell. Let's see what we get. Very flat Nasdaq. 10 seconds, chat. 10 seconds. All right, guys. Here's the opening bell. Market is open. Tesla at 235s. Q at 486s. Nvidia shooting up to 122s at the open. Something's bouncing up that's helping me. Tesla. Look at the Q rip. Nvidia bouncing up too. We're in short. We're going to cut it. Although I think I probably could have held it. A little bit too close to the open, I think, for me. I don't think so. Maybe I'm getting a little greedy here. Trying to go, but we're short. There we go. So we just made like $30 or $40 on that short. We're testing this resistance level here. We're up a lot, so I'm hesitant to hold it long. Tesla's breaking highs. We got this resistance level up here that I'll probably start shorting into. Maybe I'll take 2 contracts here short. Yeah, we're gonna have to cut this. Oh my gosh, we just added. I did not mean to add. Oops. Somehow it worked out for us, but I really didn't mean to add there. I'm gonna get out there. Somehow I made money accidentally on that trade. I'm not sure how. Sure. Yeah, sure. Thank you. Yeah, it's a little warm. All right, Disney's pushing up, so we bought Disney. Thank you. Okay, yeah, somehow we're green on the day. Hopefully I don't get in trouble for the DCA rule. I wasn't trying to DCA into it. Again, this is on Apex right now. Okay, later, Phantom. What lag do I have? 0 RTT, 0 MS is what mine shows. But I'm in a wired connection. Oh, dude, I was gonna buy. Look at that support hold, dude. Look, I drew the support level down. And, maybe it was the wrong time, so it bounced perfectly off of it once, and then just really deep rejected. I'm gonna buy this dip though. Add to this. Take half off there just because that was a really quick retracement. Weird. Yeah, I think I should have just stayed with the choppy strategy. Like, here's the P&L right now, chat, if you want to see it. So we are down $5. So somehow we're neutral in the day. Again, the choppy strategy I think would have worked the best. Again, we're gonna buy it when we're way down here. See if we retrace back up. There we go. Okay, we're out. All right, so now we're up 60 on the day. Might do the same thing. Part of me is tempted to short here, but we've just resurged so fast. Q's testing highs. We got the Fed minutes report today, chat. Again, we do have some data dropping. We have services PMI dropping. I believe it's at. Yeah, so we have S&P final services PMI dropping at 9:45, and then factory orders ISM services at 10. Look at the market break highs again. Wow, look at the Q. Tesla up, Nvidia up. Let me see what else my portfolio stocks is doing. So we're nicely green here. Nike's my one trade where I would be doing better, but freaking Nike. I'll just hold it, but MU's very green. When did I buy MU? I must have bought it a few days ago. I don't remember when. Home Depot's green. Tesla's still rocking it up. I'm gonna try to buy this again. Got a slight green day right now. I could take a risk and add to this, or I could just get out. See, I should have stayed with my plan to be choppy, I think. Is what I should have done. Oof, nasty. All right, so we just dropped. We're down 160 on the day. I should have gone with my choppy trend. Remember, guys, I talked about how I thought the day was going to be flat. And instead, I tried to be dumb and trade momentum. It's fine. Like, we're green on this account. Like, look. This is my trading over the last 3 days in this account. So we're kind of like neutral on it. We're down $80. Total, though, like, look. Let me do custom. Yeah. Total, we're green, though. Like, we are up. Yeah, if you look at this account, we're currently up $521 on this funded account. Again, we're processing a payout in another one, or we're trying to. We have to change our business name is the only reason I haven't gotten the payout yet. Should have gone with my original strategy of trading chop. Yeah, I just have good lag. Or I have good internet. Yeah. I'm not sure what I want to do with the Nike position. I bought it, but it's been weighing down my portfolio. So I might, you know what? I'm gonna take a little bit of it off right now. I think Nike. It's dropping too much. I was hoping it would bounce back. And so I'll give it some room. If Nike breaks the lows of today, I'll cut it. Made a little bit of profit. Now we're down. The rest, got a flat total. Hopefully we bounce back. You know, the SPY, the Q are both at the 200 EMA VWAP level. I like those bounce spots. The Tesla's breaking high, so it should hopefully drag it up. But the problem is Nvidia is testing. There we go. All right, so we're out. All right, so we made some on that trade finally. Maybe got a little impatient about it, but we're back up to where we are down $75 on the day. If we get up to this top of my cut, look at Tesla. Guys. Tesla dragging things up. I'm going to short now, though. We're going to take the other side. Was originally looking to ride chop. Tesla just flying up. We'll add one contract to it. A quick rejection and then it retraced, so it just kind of went down there, stopped everybody out, and then came right back. There we go. Come on, break down. Well, we just gave back some of their profit. We're gonna switch the account now. not worth it. Too much risk. See how it goes. But let me pull this up. This one, we're green. Sorry, I'm checking. I got a bunch of accounts here. I'm trying to figure out which one I want to use. Okay, there's one. Okay, well, we're doing better now, but I'm thinking the market's going to be choppy. There we go. All right, so we ended up making a lot back here. Hold on. Let me see what we're up or down. Okay, so we're back up to, look, I'm going to switch this account regardless. We are back down to $100, $87 in losses. We're still down, but not as down. The short was correct. It just kind of got a little bit too high on us. But again, we're going to switch this to where we are trading a different one now. Tesla finally pulling back. I do think we're going to get choppiness today. I just don't know when we're going to break out of this range. Remember, in 5 minutes, guys, we got the services PMI. Is AMC and GameStop moving? Are they really? Oh, they are. Wow. Good. Click the connections icon, top middle right. Uptime is 1613. That's how much I've been connected. Yeah, so mine says rhythmic RTT colon 0 MS. That's what mine says. So, whatever that means. All right, so now we're heading back up. Look at Tesla. Tesla is flying. Yeah, we're watching Nike. We're green on the day, but because of Nike, we're less green. Make sure this is the right account. Since I'm going kind of crazy here, but I got to make sure this is the right account. Okay, yeah, good. I was about to say, all right, I didn't want this to accidentally be my actual funded account because it's not. And so with taking crazy rig size like this, you know, again, the economic reports drop soon, so I didn't want this to be my actual account. So you guys know. I'm gonna have to cut this before the data drops in about 3 minutes, though, I think. I think we're going to get choppiness leading up to this data report. So since we're high up here. All right. All right. Yeah, somebody told me the other day, they were like, to get funded on the 250 challenge, just make little $1,000 trades, make 15 of them, scalping it. And so that's what I'm going to try to do with this one. I'm also kind of watching Nike. We're going to wait for this data report to drop before we trade anything else in our actual funded account, I think. Guys, we got about a minute and 20 seconds left. A minute and 20. Where's the information to trade on Apex? Apex is a funded program. Again, most day traders lose anywhere they go. Doesn't matter whether they're on Apex or whether they're on the right side here, which is TOS, Think or Swim. Most day traders lose, right? And so understand that they're a sponsor of mine. They're biased. But here's the links that you're asking for. Yeah, I think Nike's long term as well. It's just a hard hold for me. Again, the question I have to ask myself is this: are there better opportunities than Nike right now? I think the risks of Nike, again, and I bought it a couple days ago and I'm down. The risks of it though are okay. The problem with Nike is this: is that people are talking about the sneaker market dying, right? And I'm not super in tune with that market. And of course, you're gonna have a lot of people that are into sneakers being like, no, no. I do think that it's not super likely that the whole industry just fails. All right, guys, here we go. Here's the data release. But we'll come back to that in a second. All right, we have services PMI data dropping right now. 55.1 is what's expected. 55.3 higher than expected services PMI. Higher than expected services, more strength in the services sector. S&P Global Composite came in at higher at 54.8 as well. So both of these came in higher than expected. Chad, the big one drops in 15 minutes. So the ISM non-manufacturing, the ISM is the Institute of Supply Management. The non-manufacturing report drops in 15 minutes. But yeah, going back to sneakers and Nike stock. Sneaker culture is huge. You know, I think the probabilities of it failing are low. But it might lose some market share. Like it might lose interest. Still be around, but lose interest. Right? Kind of like I love poker, right? But poker has booms and busts where poker gets huge, everybody's into it, everybody's supporting it. It's on TV, everybody loves it, and then it has kind of slow times where not as many people like poker. Right? That's normal for any industry, for any interests like this. And I think what we might be facing now is a decline in sneaker interest. And if that's the case, I still think Nike's going to go up eventually. But the question is, how long does that take? That's the real question. And again, I really don't know. We got a flag pattern. I don't really want to get caught in this flag pattern, though. Like, I can add a little bit to this if it does it well, but I do not want to hold it if it starts like breaking highs or something like that. Like right now. It got me added to this. Ugh. Oh no, I just doubled my size. See, I did the exact thing I didn't want to do. I accidentally doubled my size. We're right around the highs. I don't think it makes sense to sell it right now because my trailing drawdown is going to be so low, but give it a shot. I'm going to have to fix my average here. And somehow go back to green. All right, so somehow we are still green here. All right. I hear people talk about GameStop. GameStop is running a little bit. It's not a crazy run though, but it needs a bounce back. That's good. We're gonna take a big swing here. I think we're gonna get choppiness leading into the manufacturing data. We're not wrong. very right about this one. Taking profit. All right, we're about halfway there here. Okay, so we're up about 3 here. I don't know if that's gonna hold. Go back to this. We got 10 minutes before the S&P data comes out. Exit out. I'm in a lot of different windows here, doing a lot of different stuff. Close this down. See how Nike's doing. I've been trying to watch Nike. I think I have to sell some. Yeah, we took some off of Nike, so we're not super worried about it. It's just still breaking down. We got 50 shares left, so 50 shares is fine. Hey, later, Sam. Have a good day. Balance. Higher, lower results. Nobody's buying work boots. Sneakers are here to stay. Yeah. Well, y'all are doing better than me and Nike. I don't know though. I think sneaker culture is always going to be around, but it's probably going to lose interest. There's bubbles in everything. Sometimes there's, like I watch the watch market, pun intended, I guess. I watch the watch market, but there's bubbles everywhere. We're short at the top here. Again, it's a choppy day. We got 9 minutes. I was hoping we get choppy today, but we've got a lot of rips and stuff. DJT. Is that the Dow Jones? What is DJ? Oh, I know what DJT is. 10 seconds. A strong, unexpected day though today, leading into the fourth. Like we might hit our max loss here in this one. Again, 250K challenges are hard to get for me. Like it's just easier for me to get funded and stay funded in the 50K challenges. I know the 250K gives me more buying power. Yeah, there we go. So, but it's just too difficult to get funded in this for me. Like it's not worth it. I know you can get more buying power. I don't ever need that much buying power though. Put this one up just so you. This is our other funded account. Here's the Dow. We'll go back to our regular funded accounts, the challenge. Look at the Dow breakdown here. Nobody trades for you, Edward. Yeah, I don't have a service where you give somebody money and they trade for you. I have one where there's a funded account program where they fund you if you pass the test. It's called Apex. Look in the description if you want to check it out. Yeah, I probably should break it down into multiple days. But again, to be honest, the 250K challenge is less favorable odds though as well, right? So like I think the drawdown is less than 2 to 1, and so I'd rather get the better odds. Like if I'm funded, I'd rather have better odds. You know what I mean? No service. Take the VIX into account when putting on swing trades. Sometimes, yeah. I mean, I'll track volatility. I think it's necessary. I like the 50 to 100,000 tell. I like the 50 to 100K ones, but that's subjective. Try one contract at the Dow and see what happens here. This is my funded account. This is kind of a dumb trade now that I look at it in hindsight. I'm going to cut it. Yeah, kind of a dumb trade. The reason I think it's dumb is because if we're going to get a choppy day, especially 5 minutes before the ISM PMI data, this is more probable to go up, I think. Kind of a choppy range as opposed to like really breaking down and looking weak. So dumb trade by me, I think there. All right, guys, here we go. We got 4 minutes left until we have the ISM PMI data. ISM PMI data is expected at 52.8%. Yeah, I mean, Michael, I think the VIX being at multi-year lows could. I mean, I think the SPY and the Q and the Nasdaq have been at lifetime highs. I think it's probably time for a pullback. I'm not really buying up anything now because we've broken highs and broken highs all year. I think a correction is coming, and so I'm just And again, if we look at the Dow with the same thing I said, which was my original trade was dumb because I thought the Dow would probably push up. Look, that's exactly what happened. Exactly what happened. And so I think sometimes if you look at a trade under a different lens and you realize you're wrong, you need to just have the discipline to cut it. Because again, if I didn't see that, what I saw here, I would have ridden this thing down and lost money. So I was lucky enough to recognize that this was probable and cut it. Good lesson, I guess, if you want to understand what I did and not getting your ego in the way of trades and just kind of cutting it if you think you're wrong. Tesla pushed up to test highs here. Literally the same thing every day. Market just pushes higher and higher. Yeah, I mean, it's not really a. That's the nature of the market. I mean, that's the market. Yeah, I mean, Nathan, I mean, read in your chat history, brother. It seems like you are just really bearish, and so the market pushing up is like making you upset, or you're just trying to disagree with the channel. I think you're probably just bearish, though. But again, man, like, look, long term, that's what the market's going to do. Like, you might be right about trying to pick a correction or whatever it is, but most of the time, market's going to be going up. Most of the time, the market's going to be bullish. If you look at the history of the stock market, brother, that's kind of what it does. You know, here's the QQQ. Yeah, you get bear markets. Most of the time, the market's going to be pushing higher. If you try to trade against that edge, again, it's one of the biggest sucker bets that you can get involved with, trading against the bullish edge of the market. Now, you can short things, but the longer you hold those shorts, the less probable you are to make money, I think. But I do agree that it's time for a correction. All right, here we go, guys. Market's about to drop in 40 seconds. We got this data release. Apple breaking all-time highs. All right, here we go. Here's the ISM data chat. All right, here we go. Boring is good. Boring is profitable. Yeah. Everybody wants excitement. All right, look at this rip in markets here, guys. So the rip in markets is here. ISM PMI showed up at... Wow, look at this huge rip in markets from the PMI release here, chat. This is mostly due to ISM data coming in way lower than expected. At least the Dow ripped. The Q ripped up too to 488 and then came all the way back down. So PMI data showed up lower than expected universally. Non-manufacturing PMI came in at 48.8 versus 52.6, showing weaknesses in the services sector. And market is not reacting positively to that. 48.8 versus 52.5, and the market's pulling back a little bit. I think it's necessary. Again, like I said, I'm not really buying up anything way up here. There's the PMI data release. So again, I'm not really buying up anything up here. It's just too extended on the upside. Now, maybe we'll get some good stuff, but again, we'll see what happens. Remember, guys, we got the Fed minutes report later on at 2 p.m. So in 4 hours, we got the Fed minutes report. Be ready here, guys. We'll be live streaming that as well. Remember, the market does close early today at noon. And if I don't see you later on today for the Fed minutes report, have a safe weekend. Yeah, have a safe weekend. Y'all be good. Remember, guys, Fed minutes report at 2 p.m. might cause some volatility, but the market's going to be closed. And so we'll cover that. But again, the market might be closed. Y'all be safe. Again, if you want to check out one of my sponsors, Apex, great sponsor. They pay me money, though. I'm biased because they pay me money. Understand that. But if you want to check them out, it's a great way to learn day trading with limited risk. They test you on a demo account. If you pass the test, they fund you. If you fail the test, you only lose what you pay for it, which the base one's $35-40. If you pass the base one, you get $25K in funding. If you fail, you're out $35-40. You got to make $1,500 on the demo without losing $1,500 first. It just makes sense. It's a logical way to test yourself. And most day traders lose, and that's probably the same here. Most day traders will probably lose here as well. A lot cheaper to lose here than to put up 4K and lose that. You can also get the 150, 250, and 300K challenges for the same price, $35 to $40 a month. If you use my coupon code BT, beginner trading BT, 2 letters, will get you that max discount. Again, they're a sponsor. They pay me money. I'm biased. I always tell you guys that. Here's the link if you want to check it out. I'm going to get out of here. We'll be back a little bit later on today, chat. Remember, CFTC 4.41 hypothetical or simulated performance have limitations. I don't trade all of my trades on stream. You're going to miss some of my trades. Do not copy me. Not an investment professional. Understand all these rules and that they're a sponsor of mine. I'm biased. I'll answer this one question. Do you know how strict Apex is on their rules during no trading news? It depends on how you trade. If you trade your normal strategy with your normal size during news, it's fine. If you try to go super big on news events, they're probably not going to allow it. It depends on how you trade. If you trade normal size, maybe smaller size than normal, that's fine. If you trade crazy big size trying to ride news volatility, that's a no-no. So that's my understanding of it. I'll see you guys later. Y'all be good. Again, we'll be back in a few hours. Later, team.